Hello everyone, so today we're going to go ahead and talk about lots of different stocks. So it's been a while since we did this, but we're back at it, so let's go ahead and begin Let's go ahead and start talking about some of the different stocks that we talked about during our last streams, and we are also going to go ahead and discuss AMC, we'll talk about Gamestop, we'll talk about a lot of different stocks. So if you guys are just tuning in, if you guys are interested in any of the stocks and want me to do some financial breakdowns of those, feel free to leave me a comment or just let me know in the comment section. And yeah, we're going to go ahead and break those down. So it's going to be pretty interesting. Again, I would like to have a conversation with you guys, so whenever you get a chance, just go ahead and leave me a comment. So we'll go ahead and start off with some of the most volatile stocks from the recent track that we had to do. So let's do MFA. So I have a list of stocks here in my iPad, and once we find the undervalued per se stocks, then we're going to go ahead and list those into the chat, and we can talk about those in the week and just follow up in a couple of days and follow up on those and just see how those stocks are doing. So let's go ahead and look at a 3-year chart for MFA. So MFA is one of those companies that has been constantly trading above this red trend line that we identified a couple of weeks ago. So it has been doing pretty well. It has been bouncing off of that. It's still trading above the 20-day SMA line. By the way, my settings are still 180-day SMA line for the green line, and we have the blue one, which is the 20-day SMA line. So we'll go ahead and start off with the fact that we ended up buying a ton of different shares right here at the dip. We traded for a little bit. I took some profits here at $4.05. Currently the company is trading at $4.43, and I actually just recently started buying back some of the shares that I sold. So the reason why I started doing that is actually, let's take a look a little bit closer. So 3-year, actually no, let's do a little bit shorter, 180. Yeah, there we go. So this kind of pattern, let's go ahead and see if we can create a trend line. There we go. So this is another trend line that I am currently following. So we'll erase this one just to make sure that we're not getting confused about it. Actually, I think it's going to be like this. Remove. There we go. So this trend line, right? So it's currently trading above this trend line. It's bouncing off of it. It hasn't dipped below it in any point over the past couple of months. It's doing pretty well. So what's going to happen is we're just going to have to make sure that we follow up on this within the next couple of days and see whether it's going to continue to do what it's been doing over the past couple of weeks. So now company is trading above this. We have at $4.50 we have an alert set up, and yeah, this is one of those companies that hasn't fully recovered from the very beginning of the Rona situation. So dipped down, still considered to be undervalued, lost about 81% of its value, was able to recover about 50% of it, went up by 200% overall. So all the way from about $2 consolidation price all the way to about $4.30. So we're doing pretty well. Not a very large position for this specific account. We're up $469 on the MFA. So MFA is doing really well. KMI. So we'll talk about, yeah, we talked about KMI a while ago. It's been doing really well. Still holding on to my positions. Both of these alerts were from the past when we were trying to see whether the company is gonna start trading above this resistance line, which ended up happening. We are getting pretty close to what's called a golden cross, where the 20-day SMA line crosses the 180-day SMA line. So once that happens, they usually acts as a confirmation of a very strong upward trend, which happened right here. So at this level, we're just going to have to see whether it gets rejected by this price level. So right here we can see a lot of consolidation, right? A lot of support, and then a little bit of volatility here before it tanked. So we're seeing double top here. So we're just gonna have to again be careful with this with KMI. It's definitely on the overextended side. Yeah, it's definitely on the overextended side. If you look at the RSI, MACD indicator, it's approaching those levels. So not the best deal that we can possibly get. We talked about GoPro a while ago, so we'll just follow up on this. Let's look at okay, wow, so this is a 3-year chart. That's a lot of volatility. Way on the overextended side, despite the fact that RSI indicator and MACD indicator are pointing down. RSI indicator is still not on the overbought side. Nonetheless, there's still a lot more room for a downward trend all the way up until 180-day SMA line, which is about 45% lower than that. So we'll follow up on a different one. Let's see if we can find a... Oh, this one is exciting. We'll find more undervalued companies. So MITT, this one is a real estate investment trust fund. MITT. So we can see that they pay about 2.16% in dividends every year, which is, you know, better than no dividends at all. If you look at a 5-year chart, it used to trade at about $15 a share, and ever since it dropped by about 80%, it started trading at about 2.5, 3. Right now it's trading slightly above $4 per share. So with just a little bit of dividends, we still have a lot more room for growth, right? So this is one of those stocks that I'm making a little bit of money on it. It's about $200 on the position that I'm still holding again in this account, but it still offers a lot of consolidation and a lot of room for growth, for recovery. So about 144% growth up until the next major line of resistance, which is 180-day SMA line. Next line of resistance for this specific company is going to be around, again, $4.50, so about 50% higher. We can still see that it's trading above 180-day SMA line on a, what is this, 180-day SMA, 180-day chart. So this price level at about $4.03 is going to most likely tend to act as a support. So that's another floor, which is great for us. All right, so these are decent companies. I like MITT. I'm slowly buying into MITT just to see whether it's going to continue going up. Yeah, if we also look at their earnings reports, right? So we have 45 cents a share, we have 36, 45, 40 cents, 52 cents. Now they recently reported their earnings and they paid 91 cents a share. Awesome. So they went from paying negative 9 cents, so losing money, all the way up until paying 91 cents per share, which is great. So MITT, so far, I'll make a mark for us. And so far, MITT is doing the best. Oh, not there. There we go. All right, so MITT is the best one so far. Let's go ahead and check out CCIV. All right. I do remember talking about CCIV just because of all the crazy volatility that it has been experiencing. So the company went from being $9 a share all the way up to 64, almost 65. It's trading below 15-day SMA line or 20-day SMA line. It's most likely going to get rejected here. So definitely on the overextended side, despite the fact that, again, RSI and MACD is turning around. Seems like it's about to go up. But those are very common traps for a very large population of people who just try to follow those indicators like RSI indicator, SMA indicators, and MACD indicators. So you gotta put a little bit of experience into it whenever you're actually trading those. So from my experience, once it gets a little bit closer to the 20-day SMA line, especially with such a high volatility, it tends to not do as well. So let's go ahead and move on to the next one. I'm not going to spend too much time doing CCIV. TWO. All right, TWO is another one. So this is a good stock. I like this. I'm surprised that I don't have any. Okay, so yeah, so I'm surprised that I actually don't hold any positions in here. I thought that I did ended up trading this one. So TWO. Let's see. Okay, so the reason why, okay, I do remember that it doesn't have a lot of volatility and seems like it's consolidating right now. Okay, so they pay 9.23% in dividends. So TWO, Harbor Investment Corporation, so another real estate investment trust fund that was able to recover about, let's see, about 50% of its price, of its previous price and previous lows as well. So if you look at the max chart, all the way since 2009, it was trading at about $13.8 a share. Now it's at about $7.37. So we still have a lot more room for growth in this case. And actually, I would like to set up some alerts here and see if it's going to continue to go up. The way I'm going to do it is I'm actually going to zoom in a little bit. All right, so I like this. I like this consolidation. I like the fact that, you know, it tested the support line that we identified a while ago, which was previous resistance line, confirmed it, and now steadily going up. And it looks like on the intraday chart, or I should say probably on the intra-week chart, we have a cup and handle formation with, again, this about to be formed golden cross with 20-day SMA line trading slightly below, but hopefully will cross and continue to go up above 180-day SMA line. So this is a good one. I like it. So TWO. All right, so let's set up alerts. TWO. And I usually set up one at the next move for the next day. Let's see. Create alert. At or below. Create. And this one is going to be just below this support line. At or below. There we go. Awesome. So we'll follow up on TWO. TWO is a good one. Let's see. There we go. So TWO has room for growth. Let's see. CMITT. We talked about that one. All right. So IVR. Okay, so it's trading down. Okay, so IVR is one of those stocks that I'm actually losing a decent amount of money on just because I'm holding on to it, just because of potential. So let's look at IVR. Let's look at their longer chart. So if you look at maximum, we can see that ever since 2009, it has been going down slowly. It has its peaks, it has its valleys. The usual trading price is about $15 a share. Right now it's way undervalued. So it's trading at $3.36 a share. They pay 10.71% in dividends. Still considered to be overvalued by Yahoo Finance, but the reason for that is because their financials are not very good. So in this case, IVR still extremely undervalued. I would definitely put this one to be more on the high risk, high reward companies. Yeah, 10.71%, that's crazy. So $3 a share, not bad at all whatsoever. So that's Invesco, IVR. We're gonna continue following up on this. I'm actually very, very curious. I'm very curious what's gonna happen with it. And if we look, let's look at a 180-day chart. So this line right here, so we're going to remove this one and we're going to create another one. This line right here is going to be our next major support. So we're still getting a little bit closer to that. I do not like this formation. I would want to wait for the confirmation of the company to go up before I buy into it. I do see that this kind of a trend, this kind of a channel is very much experiencing a lot of downward pressure, and I would not want to risk just buying into something that is still reporting negative earnings report. Let's see what the 1 year chart looks like. Yeah, so it had definitely tested out its bottom at $2.76, and yeah, still kind of on the way down there. So I would say that this is definitely one of those companies that I would just buy and hold on to. You know, maybe not a significant, I guess, like chunk of your portfolio, of my portfolio would go into it. That's exactly what I ended up doing. So just ended up putting some money aside and just waiting. Nothing crazy, nothing major. There's no reason for me to be day trading or swing trading this one. Just another company to look into that hasn't recovered from the pandemic yet. All right, so IVR is doing well. So next one is CIM. IVR, should we put this one? I don't think we should put it into the chat just because it's still showing a lot of downward pressure. So we'll leave it alone. So IVR. CIM is overextended, doing really well. We're making some money on CIM, sorry. And it's getting very, very close to this 180-day SMA line. RSI, MACD indicators both are overextended. Company has been able to recover about 80% of its previous price, doing really, really well right now. Let's look at their chart. All right, CIM, 9.10% in dividends. Nice. Doesn't have a lot of volume, so this is another real estate investment trust fund. Let's see max chart. So it's been on the bottom of about $10.80. So right now $14.50. So you used to trade at about $15, $19, $16 back in 2017, even $20 a share. $21.20 was the highest in January of 2020. So in this case, that's good. That's a good sign that the company used to trade at about the same level at which it's trading at right now. But I would say that CIM is a little bit overextended. We're not going to put it in the chat just because it's, again, a little bit too overextended. Not very interested in that. If you have any ideas, by the way, for any of the companies, we'll dig into AMC stock, we'll dig into Gamestop, we'll talk about some penny stocks here. I'm gonna be here for a while, so feel free to chime in and let me know what kind of companies you want me to break down. Give me some ideas. We can talk about those as well. So BA, all right, Boeing Company. Boeing Company is doing pretty well. It's doing pretty well. It seems like it's recovering. It's getting closer to 180 SMA line. This one small red candle, it doesn't really do much good for us, so we're making some money on it already. We ended up buying a few shares here and there, but again, nothing too major. It has been good. Like it's been good. So overall, the flights are picking up. Boeing is doing better with. They dumped all of their negative information when everybody has been dumping all of their negative information, negative finances, bad news at the very beginning of restrictions that were implemented. So I'm not very surprised that the company is recovering now because they're stopped dumping all the bad information. So I'm making a little bit of money on this one. Basically making the same amount of money that we were losing on our previous company, so we're good. All right, let's see at Boeing. So BA. With BA, so considered to be overvalued, doesn't pay any dividends, 5-year chart. If you look at maximum chart ever since 85, they started reporting their chart, seems to be on the overvalued side. I wouldn't want to load up too much on this company. Nonetheless, $249.92. I'll keep it at that. That's That's a good level. I don't want to sell, nor do I want to really. I don't have that big of a position. I only have 4 shares of it, so I don't think I would want to buy more. I don't also really see the need to sell. If you're holding on to any positions of BA, up to you what you would do. Not a financial advisor. What I would do is just I would wait to see how it's going to test out this 180 SMA line. So far, it's been pretty good. So ARL, next one. Lots of volatility, not a lot of volume. They reported their earnings, which was positive. That ended up sending the shares up by a significant percentage, about 30% up. So all the way from $8 to $12.50. Currently trading above 180-day SMA line on a 3-year chart. Definitely on the overextended side, we can see that this level of price, about $13.70, was tested multiple times as a support, resistance, again, a few more times of consolidation here, resistance again, getting closer to 180. Not very interested in investing into this one long term, just a little bit too much volatility. We have been following up on it, and it's very interesting to see how, for instance, like this aspect, right? So we ended up drawing both of these lines, right? We were setting up our alerts above and below this. So I do remember that when they got triggered, I was under impression that the company is about to go up, right? And we had to find out what the confirmation is going to be. And we set 2 of the alerts below and 2 of the alerts above those 2 trend lines. And when the company played out perfectly, going under the trend line, confirming it as a resistance, finding the new bottom, and then skyrocketing after reporting its earnings, like that was a great play. Like that was a great play. So that's exactly why you would want to draw the trend lines. That's exactly why I do it. So, you know, it doesn't always work perfectly, but this is a rule of thumb. This is how I trade. This is how I find undervalued stocks. Unfortunately, ARL is not going to make it to my list, our list today, but let's talk about some other ones. CCL. Wow, CCL is breaking out. Nice. Finally, we are again making a little bit of money on CCL. We are trading above 20-day SMA line. We finally broke through this major downward trend line, and we're getting closer to 180-day SMA line. Let's see how much more profit can potentially. Okay, so we can still shave off about 18.5% up until 180 SMA. Ideally, we would see a little bit more support once we, face the resistance, potentially come down to about $30.37 a share, and then hopefully by that time, somewhere in October timeframe, we're going to be trading above 180-day SMA line. So CCL, Carnival Cruise Lines, they're doing pretty well, right? So overall, ever since half a year ago when we started, actually no, about a year ago that we started looking into these, their financials are still pretty bad, but people are investing into the company just because, I mean, it's a season. It's a season. More cruise lines are going to go out. More people are getting vaccinated, and yeah, travel season is just peaking out. Restrictions seems to be going down on travel in a lot of different countries. I don't want to say majority, but at least in the United States. So yeah, very interesting. I still do think that this company is undervalued at the price level at which it's trading at right now. So about $30 a share, right? So the highest price we've seen was $71 a share. The average price at which it used to trade over the past about 20 years is about $34, $39 a share. That's good. That is good, and it's gaining the momentum. We're going to be experiencing most likely higher inflation, so more money in the markets. Everything seemed to be overvalued. So for this one, I like it. I think I'm gonna actually take more positions on CCL. So far, yeah, because it's breaking above. I'm not trying to convince myself. I'm just trying to rationally think about this. So if I see that the company is trading above the trend line we identified over the multiple months, right, that it was getting rejected against that line, and it finally confirmed it as a resistance, broke above it, still trading above 20. great sign for me. They still reported negative earnings, $1.65 per share, which is the lowest one over the past few months. Yeah, definitely there's a lot more room for growth, for recovery, but don't think it's going to make it to our list. I don't think it's going to make it to our list just because we have our indicator that is pointing a little bit too high up. Ideally, I would want it to come down a little bit, consolidate, and actually start trading above 180-day SMA line. I'm not worried about missing out on those 20% potential profit unless I would be holding on to it for a very long term, which I think I will, at least the position that I'm holding at right now. I try to diversify my portfolio, and I have about 30 different positions in different stocks, different companies. So I think in this case, I'll just go ahead and leave it as just one of the companies that we reviewed today. So CCL is good. Good, but not the best. We're searching for the best. So CCL, RCL. I would imagine RCL is going to look very similar. Yeah, okay, so with RCL, we're also holding on to this company. It's been doing very well, recovering. Let's go ahead and identify what's going to happen here, whether we are experiencing a resistance, right? So at this level, we had seen support. We had seen three times we had seen a major support. We had confirmed it as a major resistance about 2 times. We see this one red candle, which is still above 180-day SMA line, which is great. But one red candle is not going to give us too much information. So just based on the technical analysis, just also knowing that RCL, Royal Caribbean, is experiencing a decent growth in the amount of people who are utilizing their services. And again, all of it comes down to restrictions. All of it comes down to the general concept of being able to travel, and also for investors, a general concept of investing into companies that solely depend on people traveling from one place to another, or just traveling for the sake of traveling. Therefore, there's a lot more room, for improvement for this specific company from my perspective. Despite the fact that it was trading at about $110 a share over the past 2 years, except the last year, and the fact that it's trading at $94 a share leaves about another 16% profit margin. I do think that this company is still going to do well as long as it continues to trade above 180-day SMA line. More people from US are traveling right now, and I do think more money is going to be thrown in their direction. And yeah, they've already established a decent ground. A lot of these companies, a lot of these markets are also emerging in a new way too. They're developing their technologies, they're developing their approach, right? So they're becoming more resilient to the same exact things that they had experienced over the past year. Their financials are still not great. They still reported negative $4.44 a share of loss on their shares, for dividends, but it's also the lowest negative balance that they had reported over the past couple of months as well. So over the past year, they had reported a positive earnings. They had a positive earnings report right here, which was in February, and that sent the shares of the company up all the way to 180-day SMA line to $94 a share. After which it had experienced some, channeling, some peaks and valleys. Consolidated for a while, established the floor at the previous resistance, current support at $81 a share, and ever since then, finally broke above 180-day SMA line. So I'm pretty hopeful about this one. Let's see if RCL actually pays any dividends. RCL. Don't pay any dividends. All right, fine. That's not bad. It's still not bad. If you look at the maximum chart, one can make an argument saying that it's overpriced, overvalued right now. I wouldn't be able to argue too much about that. The company used to trade it back in 2015 at the same valuation, and then came down and established previous floor. It had kind of like a head and shoulders formation, and the previous floor was at about $67 a share, so about 30% lower than the current trading price. So I would not want to invest into it right now, but I'm not going to sell any positions that I have right now just because I do see more room for improvements. Maybe not the best one to invest into, but still a decent one to hold on to. All right, RCL. Let's see what else. All right, good. So good, very, very good. Okay, so I think that this one is also a real estate investment trust fund. I'm excited about this one. I think I'm gonna take a couple of positions on this company. So if we look at the maximum chart, it used to trade at $58, $60 valuation, usually at about $50 a share over the past couple of years. Company was established in 2017. The floor that it had experienced was about $28.65 a share, about $27, so very close to the current trading price. But it has been doing very, very well over the past couple of months, so over the past year actually, since March of 2020, was able to recover. And right now, so Yahoo Finance doesn't seem to show their expectations, which is good. Total return good. So it barely yields any dividends, so I would say it doesn't yield any dividends. I do want to, okay, so direct daily aerospace and defense pool, 3x shares, direction daily aerospace, Dffn. I like this. This is an ETF. Good. I like this. This is a lot of volatility, but definitely it's finally breaking above this resistance that we had identified. And it seems like the next candle is also green. And let's see, there's one more thing that I want. Okay, yeah, good. So it's kind of like a cup and handle formation. It's pushing up. In the ideal world, what I would want it to do is go down, confirm this level, or maybe even this level, about $23.28 per share as its support, and then continue to go up. Is it on the oversold side or on the overbought side right now? If you look at the 1-year chart, I would say that it's getting closer to the overbought side, but if you're buying into something like this at these valuations at this level, you would want to look at the longer chart, longer term chart, and yeah, right now it's still showing a lot of potential for growth, a lot of potential profit. So let's see, up until the next major resistance, it's about 36%, not bad at all. We can see the next resistance, so here's resistance, and this level is about $44 a share, which is 70% higher up. And the next major resistance, which is about here, $64. I would assume that, yeah, so another 149% potential profit. So that's not bad. That is not bad. We are going to go ahead and add this one as well. Potential for $50 profit. There we go. So let's see what else. I can't wait to get to AMC and Gamestop, all these stocks. So NCLH. If you guys have any ideas for any of the companies that you want me to break down, feel free to let me know and we can talk about those. So NCLH. Way on the overbought side, don't want to spend too much time talking about this one. It's getting closer to 180-day SMA line, finally broke above our resistance line that we identified, confirmed it as a support multiple times, doing pretty well. The only thing I would want to do is just set up alerts. Not gonna spend too much time in reviewing this one. I can't wait. I cannot wait. We'll just go ahead and talk about this. Or just let's go ahead and chat about AMC. All right. So, oh gosh, darn. That is absolutely insane. All right, so company has been trading at about $3.20. Lowest it's been at was $1.91. Let's look at the 3-year chart. That is a 3. Okay, so that is the 3-year chart. So it's been going down in price ever since 2018 and finally got down to $1.90, after which it skyrocketed to $20. So about, yeah, 1,000% jump. No, 100%. No, yeah, 1,000% jump. Nice, doing great. Then it finally came down to about $5 a share. I think just for the sake of investing and monitoring this one, I bought 1 share, and it finally had this golden cross. We had talked about this one so many times. If you're looking at a long-term chart, if you're looking at a 3-year chart, if you can see that a 20-day SMA line is about to cross or pointing up towards the cross between 180-day SMA line and the 20-day SMA line, that's a good sign. This kind of pattern seems to be proving the best over the past year on the market. If we go look at, let's see, can we find Bitcoin on this? No, we can't. We can't find Bitcoin. All right, let's do. What kind of charts are you guys using to look up? Actually, we can go to Binance, can't we? Let's go to Binance. Yeah, if you guys have any ideas on what kind of charts you're using, like which ones you're the most like interested in, I can pull those up. I do really like Binance. I just don't monitor crypto as much right now. I do tend to just buy it and hold on to it and just forget about it. But let's see. Let's do full screen first of all, and let's do. Just really want to show you something. It's very, very interesting. Let's do edit. All right, close save. Now let's do time. All right, what am I doing here? 1 week. All right. This is 2019. It's kind of similar. It's kind of a similar pattern. So hear me out on this. So we can see that the company finally had started consolidating, right? So just like the shares of this company. Actually, gosh, let me drag this right here. Can I do a split screen here? I should be able to. All right. So crashing down. All right. Why is it crashing? Let's see if we can do this again. It's really not liking this. Okay, so I don't think I'm gonna be able to do a split screen here. That is so weird. Okay, there we go. No, it keeps crashing. Okay, so I can't really do it, but you'll get the point here in a second. All right, so we see this consolidation, right? Scrolling to the side, we see this consolidation. We see this gigantic spike, right? So again, another gigantic spike. We can see a sell-off and consolidation. We can see a sell-off. We don't see the consolidation just yet. It happens so often, regardless of what kind of catalysts comes out. There are lots of sharks out there. There's lots of deception going on the markets about companies that are hyped up. And that is insanely crazy to me that companies like this get so much money, and once the news come out for people to realize that, oh wow, these companies have been doing crazy profits. They have been, they just been, how would I even say that? That is, sorry, I'm just getting emotional about this. This is insane. So the company that used to trade at about $10 a share started trading above 180, started trading above 20-day SMA line. We can finally see the golden cross right here. We don't see the, actually hold on, let's see, which line is this? What kind of indicators are here? So we see MA, where's our SMA? RSI, volume, MA. Okay, good. For 7 and 25, we would need to change that. But anyways, so if we would look at a different chart, we would see that the golden cross would be right here. So with the golden cross, 20-day SMA line crossing 180-day SMA line pointing up. Once this happens, there's lots of indicators on I guess trackers or software, just like Finwiz. Finwiz is a website where you can find certain companies by just clicking on the signal, on the trend line support, you know, the pre-setup channel, and this is the pre-setup for an enormous spike. So whenever you find companies like this, whenever you see that they had its spike, had been consolidating for a while, so ever since, what is this, January up until May, so for 4 months, this company, for actually 5 months, this company has been consolidating, and it had finally blown up. Once you see that the news come out on the Wall Street Journal, on Yahoo Finance, they start talking about it on NPR and television, that's when you see a lot more volatility, but also a lot more downward pressure on the company, because a lot of the sharks, you know, a lot of these big investors, they're pulling out shares as soon as they see that, you know, enough people, they go by quantity. There's only like just 2 people, for instance, right? Only 2 people who had bought 100,000 shares of AMC or set up a pre-buy, like a call basically, to buy those shares, but they haven't bought them yet. So they had made a reservation for that. That has driven the price up just because the people can look at the PL chart and they can see that, oh wow, somebody had placed a chart, like a buy at that point, you know, at that target price. And they are buying just because of anticipation that somebody else is going to buy it at a higher level or going to sell at a lower than them. So just that anticipation allows people from just everywhere just start throwing their money into the company like this, and then there's only just few investors with hundreds of thousands or just thousands of shares who are pulling out their money, and that's when it becomes a lot less profitable. So very interesting. Let's look at AMC. Let's look at what was I trying to do? AMC's news. All right, so AMC's down 6.68%. We have 1-year chart extremely overvalued, 5-year chart extremely overvalued, max chart extremely overvalued. And nonetheless, you know, Yahoo Finance is pointing. This is breaking the system. It's pointing up with short-term, mid-term, long-term charts, expecting that the company is going to continue to go up in price, even though, despite the fact that the news that came out were all about the company diluting their shares, releasing more shares. They had recently made like what, $570 or $517 million by releasing new shares. Was 62%. There we go. Brilliant move. 87. There we go. 587 million. I just saw it with a glimpse of my eye. Let's see. Yeah. So AMC Entertainment raises 587.4 million from sales of 11.6 million shares as the red hot stock cools update. All right. Lots of news. So let's see. Fluctuation during the trading day. So AMC stock trade between 37, 68, the highest price which it hit, down 18%. So it brings the total equity raised to 1.24 billion during the second quarter. That is crazy. As one of the top meme stocks, up more than, I'm actually very curious which link is gonna take me to, more than 2,500%. Let's see, MC Entertainment raises 5. All right, so this is the original website where the article came out, I'm assuming. No, something different. All right, no, I don't want to watch this. All right, Entertainment has been serving a wave of retail enthusiasts. Decided to sell 11.6 million shares, so they ended up adding 11.6 million shares. Exhibitor announced the plan this morning, and SE filing shares in the company, which had surged above $60 a share this week, giving once a nearly bankrupt company market value of $28 billion, have sold off today in the early going. Nearly an hour into the trading day, they were about $50, so down 20%. A warning to investors was included with the details about the share sale. The company cautioned against investing in the common stock unless investors are prepared to incur the risk of losing all or substantial portion of their money. You gotta, like, whenever the company actually releases more shares and then they tell you that hey, make sure to invest less money into our company just because we're diluting our shares, just make sure to know that. That's very interesting. So if you guys have any ideas, by the way, for any other companies that you want me to break down, for those who are just tuning in, make sure to let me know. I'm here for another couple of hours. We'll have a good time. If you got any ideas, if you got any questions for me or anything like that, feel free to let me know. All right. Yeah, I just want to make sure that it's set up properly. There we go. Investing. That's good. Let's see. Let's say it would use sale processing for general corporation purchases, which may include the repayment, financing, redemption, or repurchase of existing indebtedness, acquisition or theater assets, working capital and capital expenditures, and other investments. Earlier this week, the company sold 8.5 million shares investment to firm Merger Capital, which turned around and sold the 230 million position the same day. While the whipsaw action made a lot of Wall Street shake their heads, CEO Adam Aron described the stock sale as a very smart raising of cash. Of course he would, so that we can grow this company. The stock drama is occurring against the backdrop of revitalized North America box office, which saw A Quiet Place Part 2 and Cruella post strong opening weekends over the Memorial Day. Cool. All right. Gamma squeeze and how did it drive AMC stock price? Cool. Let's read this one. We don't want to watch this. So New York, shares of AMC Entertainment Holdings Incorporated surged to a record high this week, and blessing rally again highlighted how an arcane options market dynamic known as gamma squeeze can supercharge stock price against an interesting gamma squeeze. Interesting. AMC's rally was partially fueled by heavy trading of equity options. These financial derivatives give buyer the right to buy or sell shares at the fixed price in the future, depending on where the stock price is. As the share price moves in the formal course of trading, the value of these derivatives fluctuating with the changing probability of the options buyer exert that right. These changes are captured through the range of mathematical calculations, one of which trades called a gamma. Anyone who sells options at short gamma, gamma is highest when the stock strikes the price of the option sold is very close to that of the underlying stock. Okay, what is gamma squeeze? Market makers who sell options may ultimately have to deliver the underlying stock, so they risk heavy losses if they have to pay more than they bargained for. To hedge their exposure, they often buy or sell shares of the underlying stock. In the case of AMC, hoarders of call options buy left market makers with a massive short gamma position that grew as the share price inched closer to the higher strike price held by bullish investors. Okay. As the share price skyrocketed, market makers bought AMC shares to offset their exposure. adding more fuel to the rally, analysts said. That is gamma squeeze. Wow, okay, cool, very cool. So they're buying the call options for downward trend, right? Call options by our left market makers with a massive short gamma position. Okay, so short. So they're buying shorts and short positions, and they're at the same time, in order to offset their losses, right, that they're experiencing as the price is inching up, they're also dedicating a certain amount of money to be invested into the company just to offset their losses, which also fuels up and kind of like plays against them just because it continues to go up. Very interesting. Okay, so market makers may be said to be short gamma from either selling calls or puts. When a stock is falling, market makers are highly motivated to sell the stock to hedge their exposure. However, a downward squeeze on shares from gamma includes selling is generally less extreme compared with an upward buying pressure, analysts said. Okay, very cool. See what people are talking about. Nothing. Okay, good. I actually wanted to go to WSJ and see what we can find on. Oh, very cool. And then we can actually talk about. Yeah. Let's focus on this. Let's focus on AMC first. All right. So, see what Wall Street Journal tells us. AMC is down 6.68%. Meme stock are rocketing higher again. AMC surged 83% in the week, ended in June 4th, cementing its status as the darling of investors who post rocket ship emojis and align calls to take stock to the moon. Shares of the stock popular individual investors such as Gamestop Corporation GME 3.8% down. Have also surged over the past 2 weeks, a rally reminiscent of the Reddit-fueled craze of late January. AMC shares rose 95% on Wednesday. All right, so we have AMC Entertainments. This is over the past, okay, so this is since May 28. Very interesting volatility, lots of consolidation, lots of peaks, lots of valleys. Not surprised that the price bounced here. Okay, so Zoom is up. So the reopening of offices isn't slowing down Zoom's connection. Zoom customer count rose and revenue nearly tripled in the first quarter as the company expands beyond the initial focus on communications and collaboration to offer services such as webinars, chat, and third-party applications. Zoom has also introduced features to aid business that have some staff return to offices while others continue to work remotely. These include Zoom rooms. The companies take on trading conference rooms, traditional conference rooms, and Zoom phones, which the company sells as a telephone option for huddle room and executive offices. So Zoom shares fell 2.5% on Thursday. So this chart is set ever since June 1st, so just a couple of days. So they ended up raising up in price, raising up in value. For a decent, yeah, that's good. What, 340? That's about a $20 gain. All right, Tesla. Let's go. Securities regulations are trying to cage Elon Musk's tweet. The Wall Street Journal reported Tuesday that the Securities and Exchange Commission told Tesla last year that its chief executive's use of Twitter and twice violated a court order policy requiring his tweet to be pre-approved by company lawyers. Tesla and SEC settled an enforcement action in 2018 alleging that Mr. Musk has committed fraud by tweeting about the potential buyout of his company. The SEC told Tesla in May 2020 that the company had failed to enforce these procedures to controls despite repeated violations by Mr. Musk. Interesting. So I think that was the time when he ended up saying that he's going to take Tesla public if it hits 420 per share. Interesting. I mean, this is a through story. We talked about this a while ago. So SAC told, okay, 2020 the company failed to enforce, blah, blah, blah. Who's also publicly mocked the SAC after setting fraud claims with the agency. Tesla shares fell 3% on Wednesday. Alright, cool, let's see. So, ever since June, so company has been just going down. Nothing major, they're still at $600 a share. It seems like they're consolidating. If it wouldn't have been Tesla, I would have said that, oh yeah, the company is doing really well. Like they had, I mean, the company is doing really well, don't get me wrong, I love Tesla, but just a little bit too much volatility to invest into it right now, for me at least. So, I think I'm trying to find some other companies that are way more undervalued. I can't wait for us to talk about AT&T. That's going to be very interesting. They're super low right now. We'll read some news about them. And I definitely want us to look into some penny stocks and do some ghetto spreads. It's going to be fun. This is going to be a fun stream. I think this is going to be, I think I'll enjoy this. So Etsy is placing a large bid on the booming second-hand good markets. The online marketplace on Wednesday said it agreed to buy Depop. I don't know what this one is. So what is it? Depop. Let's see. Place. Depop was founded in 2011. Social network where the reuse of images could buy items from the young creatives featured in the magazine after realizing the revenue selling functions. Reinventing the app as a marketplace in the mobile space where you can see what your friends. Okay, so these are basically the items that you can buy. Okay, so they have a software. It's a company that allows selling of products to buyers in need who have desire to buy these products from young creators. So awesome, spectacular. This is great. Let's see what else. So Etsy is buying their company. Gross merchandise sales and revenue both more than double last year to a 650 million and 70 million. Wow, that's a large company. I mean, it's a small cap stock. If they would have been I don't know if they're public. They're probably not public. Yeah, they're not public. Up 7%. Interesting. Let's read some more stuff actually about them. Let's see what else is going on. No. Where did this? There we go. Wall Street Journal. So 70 million respectively. London-based Depop, founded in 2011, has a community of roughly 30 million registered users across nearly 150 countries, with 4 million active buyers and 2 million active sellers in 2020, Etsy said, and many of its sellers begin by listing items from their own wardrobe. Etsy shares added 7.2% Wednesday. Cool. Wow, okay. Wow, alright, so Etsy performance last week, so ever since May 28th? Yeah, May 28th. Let's pull up Etsy actually. Let's look. Is there a ticker symbol now? Is there ETS? Yes, no, yes. ETSY, right? Oh, I put ETCY. Alright, so Etsy is still way overvalued. Kind of reminding me of Tesla at this point, but just a little bit. Just a little bit. Everything reminds me of Tesla a little bit right now. So, okay, so the company is still trading above this trend line. I don't like the fact that we're still far away from 180-day SMA. 20-day SMA line is still pointing down. We are not on the overbought side according to the RSI, but according to the last 3-year chart, we're still on the overbought side. I like the fact that it's consolidating right now. I would want to set up my alerts and see what we can find out about this company and see whether it's going to continue to go down or continue to go up. Actually, it's a little bit too high. I'm going to set it up right above this level just to see at or above creates. And does Etsy pay any dividends? Do we know that? Do we know if Etsy pays dividends? they pay no dividends. Okay, cool. P/E ratio is not as high as some other companies, but that's not bad. Let's look at their max chart. They're doing really well. They're doing really well. And I will just share this, my personal observation. I had noticed that a lot of people started drop shipping from Etsy, from like on Facebook Marketplace, and it's very interesting to see this dynamic on the market. I've actually seen some products from Etsy being drop shipped on, it's not Letgo anymore, it's OfferUp. So OfferUp and Letgo, when those two companies combined together, once you try to go find something on OfferUp now, you can see a lot of these copy and paste listings there that people are offering to ship. And those are not fake listings, they're just drop shippers. But it's very interesting that this marketplace is growing so much, indirectly being impacted by the growth of drop shipping and how competitive it's becoming. Gosh, so many tabs. All right, next, and by the way, for those of you who are just tuning in, if you want me to review some of the companies, in my head, just feel free to leave me a comment. In my head, what I want to look at is AT&T. I'm decently heavy invested into that company after we read this article and see what else we can find. I want us to look into some penny stocks and maybe potentially do some ghetto spreads. I'm really curious if I can allocate maybe $1,000 and just buy maybe 10 different stocks, just invest $100 into each one of them, and just monitor my account and see if I can capitalize on any of them at any point. So we'll see. All right, so a hedge fund billionaire. Which one is this? Pershing Square 9 Holdings. I don't think I'm familiar with this company. Whoa, that's actually no, that's not a very big drop. This makes it look large. A hedge fund billionaire has the ear of the world's largest music business, a special purpose acquisition company controlled by William Ackman, is nearing a deal with the Universal Music Group that would give the SPAC a stake in Universal and value the business at about $40 billion. A deal, if consummated, would be the largest SPAC transaction on record. Universal is the record label behind the artists including Lady Gaga, Taylor Swift, Billie Eilish, and Weeknd. Its stable also includes classic acts such as Queen and Beatles, and last year it bought Bob Dylan's entire publishing catalog. Interesting. So, but so shares declined 12% on Friday. Interesting. Let's what kind of ticker symbol did they have? Wait a minute, seeing it. PSTH. Let's look. Over the past 3 years, dropped significantly. PSTH. They offer dividends. We don't see that. Market capitalization 4.41 billion. So it's mid cap company. Yeah, so maximum chart is not it's not really good. All right, let's see. So the lowest price at which it used to trade is about 2206. It's one of the lowest prices. So it opened up at 2160 and it's at 2206 right now, so very low. It used to trade at about, I'd say the average price, to be fair, is about $25 a share. That's where we can see a decent consolidation, decent resistance. And only one support valley right here in 2020. Seems to be on the overvalued side according to Yahoo Finance. I think that it's undervalued. The fact that it ended up going down by 11%, almost 12%. Not going to be investing into something that is continuing to go down. I would want to see some sort of consolidation, some sort of good news before I buy into something like this. But very interesting, very interesting. All right, cool. Let's see. Let's move on to the next one. Not too bad, but still. United Airlines. All right, so United is planning to fly faster than sound. Okay, I saw that one. I saw those news, and I think I heard about that on NPR. Planning to fly faster than sound. The airline said that on Thursday that it would acquire 15 supersonic planes being developed by Boom Technology Incorporation that would cut travel time and appeal to the higher paying flyers. United Airlines. It would buy Boom's Planet Overture jets. If the plane meets safety, operational, and sustainability standards, Boom hopes to fly a scaled-down prototype later this year or early 2022, with a fuel-size 88-seat version target to carry passengers by 2029. The deal would resurrect high-speed flight more than 2 decades after that method of travel was grounded because of the high costs and concerns about the noise it generates. United shares lost 4.3% on Thursday. Interesting. You'd think that the company would continue to go up in price, but I guess those news did not act as a very good catalyst overall for the entire week, even though we saw a spike at the beginning of last week. So, thoughts on this? First, the company. United Airlines bought these 15 supersonic planes. They haven't been flown. There's only prototype of this plane. They will try to fly a scaled down prototype later this year of this specific plane. So it doesn't exist in real world. There's only an electronic version of this plane and a projection that it's going to fly in 2022. That's about it. NASCAR All Out. Cool. Do you think AMCX could squeeze Monday as a confusion trade play? Let's check it out. Interesting. All right, so let's look at a 1-year chart real quick. So definitely on the overbought side. Honestly, it's if you're day trading. So let's determine what we are talking about here. Long-term investing, scalping, day trading, swing trading. Specifically for Monday, just not deviating from your question, it is very possible. I don't know much about the company, but based on its previous performance and at the price at which it closed yesterday, it seems like it is very, very, very possible. Let's do a quick breakdown, right? So the volume continues to go up. We see that the volume went up significantly. The volume has been significantly higher in multiple different instances, especially here. So there's a lot more room for volatility here. Again, it's 50-50. The company is way on the overbought side. We had been preparing for a jump up or down, right? And we had experienced that a couple of days ago. So let's zoom in on this real quick. So 20-day chart, right? So we've been constantly going up, right? People are buying here, trading above 20-day SMA line. And we had finally experienced this one day through which the company went up by 24%. Is it possible that it's going to continue to go up? I think if I would be you, and that's what I would normally do. I'm not giving a financial suggestion, blah, blah, blah. What I normally do is, depending on which platforms, depending on which, exchanges the specific company trades, at about 11 p.m. Eastern time, that's when Australian market opens up, figure out what they're doing and whether their market is going up or down, and then you can figure out where the company is going to go based on that. But on Sunday evening or super early Monday on pre-market hours, before the market obviously opens up, then it's going to give you a better idea. Is it possible that it's going to continue to go up? Very much possible. Have you seen AMC, Gamestop, all that? Yeah, it's pretty crazy, man. The entire market is very, very crazy. Let's see. From technical perspective, I mean, we talked about this golden cross, right? 20-day SMA line approaching 180-day SMA line. Once they cross, it's counted to be as a golden cross, and it's a good sign. It might potentially continue to push the company up, but at this point, it's very hard to tell. Like you've already seen that what can happen, right? We had seen what is this, 13% up. Then we had during the day we had experienced 10% up. We had experienced 33% up in the aftermarket hours. So this is a weekend, right? So it's possible that the same exact thing is going to happen, and then a huge sell-off as soon as the company opens up. So I think if I would have to make an educated, experienced guess, I think it's gonna sell off significantly, at least till like $63 a share. So I think you would be better off at looking at something like this. It is extremely overextended in the pre-market hours or on Sunday, the day before the market opens. But yeah, thanks for the question. Cool, awesome. I like that. I like that. If you have any other companies, yeah, let me know. So we started talking about United Airlines. We talked about the summary of the news. It acted as a catalyst to give a little bit more volatility to United Airlines. I don't think this is an extremely long-term goal. I don't think this is going to make any sort of big difference. Buying these 15 supersonic planes for the company in the short term, and even on the long term for the next couple of years. So I wouldn't worry about it too much. Let's actually see where United Airlines are. What's United? I don't remember United Airlines ticker. That's embarrassing. Don't remember United Airlines ticker. UAL. There we go. UAL. I knew that. All right. Let's see. We're making a little bit of money on United. There's nothing too crazy. The company seems to be on the overbought side. Let's look at the technical. So I like this channel, right? Let's not adjust it too much. We can see that it used to trade at about, yeah, there we go. So it dipped below this trend line a few times, getting a little bit closer to the 20-day SMA line. And on the 3-year chart, there's still definitely a lot more room for improvement, about probably 40-50%. So yeah, 58% of the previous major resistance line, which would be at this level right here. Boom. And extend this one. We do see a little bit more room up until 180-day SMA line, which is expected to act as a resistance. We have about 15% potential for growth. Is it the best company to invest into right now with the risk of 15% potential profit margin and recovery? It's summertime. They seem to be reporting slightly better earnings. Again, arguably -7, -7.5 dollars a share. So still a lot more work that needs to be done on their budget, like on their financials. I'm pretty sure they're not doing very well in their financials right now either. But if you look at the max chart, would you say that they're overbought, oversold? I would have to say that they're on the overbought side right now. Definitely not the best. What we can do. So we've talked about MITT, TWO, Dffn. Those companies are doing really, really well with potential for profit, recovery. So we'll move on to the next one. Let's go back to our Wall Street Journal. Let's see. So Apple. Don't really care about Apple. Let me know if you want me to talk about Apple. Actually, no, that's the last one. Never mind. So Apple is slicing up. It's a work week this fall in the email staff. So Chief Executive Tim Cook told office employees that they are expected to return to their workplace 3 days a week starting in September. The iPhone maker said it wants most office workers to show up Monday, Tuesday, Thursday, with the option to work remotely on Wednesday and Fridays. Apple has already gradually reopened its retail stores around the world. All of its 270 United States retail outlets welcomed back shoppers in March, And in his note to the employees, Mr. Cook said that all stores in the other markets would open their doors again by the end of the month. Apple shares fell 1.2% on Thursday. It's such a sad conclusion. That's good to know that there are 270 United States retail outlets of Apple across the United States. I thought that I would expect that there would be more, but I guess not. 270. All right. All right. AAPL. Definitely on the overbought side. Definitely far away from 180-day SMA line. I do like the fact of this flag pattern. Let me draw it out. Let's see so I don't miss. Yeah, this is good. This is very good. Yeah, perfect. So as long as it continues to trade above this trend line and doesn't go below it, then we can expect the company to continue to go up in price. Until then, what I would want to do is I would want to follow up and see whether it's going to continue to go down, whether it's going to continue to go up. Continue to go down because it has a small head and shoulders formation over the past couple of weeks. So let me set up an alert and I'll point it out here in a second. So at or below, and let's do at or above this resistance line. All right. GME seemed to rally starting January 13 when it had a flat top breaking out $20 on 6-day trading, closed at 44. AMC had a flat top breakout on 20 of May 27 and a 6 trading day closed at 44. I can confirm that. Yep, that is absolutely accurate. Are you following a lot of like AMC and GME, investing into those? How's that coming along? I wanted us to talk about GME, but we kind of briefly talked about this. We talked about this at the beginning of this Wall Street Journal article. It has let's see where it is. So again, meme stock AMC continue to go up. They continue to like compare GameStop to AMC. You can see how much more volatility and how much more attention AMC is drawing right now. So it's very, very interesting. Very, very, very interesting. Gosh, like, is there a lot more room out there? Like, is there a lot more volume? And are these? When is this earnings report for GameStop is coming out? I'm really curious what it's gonna look like. Oh, it's about, okay, so it's about to happen on the 9th of June. So 9th of June, we're gonna see a lot more volatility for GameStop. So they had reported negative 53 cents and then they reported $1.34 a share positive earnings. So now GME is going to be reporting their earnings on June 9th. We'll see how that's gonna go. And we'll see how that's gonna go. We'll see what they were able to do with all the money that was literally thrown into them. So it's gonna be fun. It's gonna be very, very fun. All right, let's zoom out. Let's see if we can find another article or two. This is kind of a summary on Wall Street Journal about this, but 19 hours ago. All right, let's see. Open the movie again. So all the border market is right in place. Shares AMC Entertainment Holdings and GameStop. Yeah, see, they're just like putting those together. There's a correlation between those. It's almost like a correlation between Bitcoin and any other cryptocurrency out there on the market. And other stock popular with individual investors swung sharply again Friday. They have surged over the past 2 weeks, a frantic rally reminiscent off of the Reddit fuel craze in late January. Fair enough. AMC became the latest darling to invest who have been banded together on the social media in the bid to propel the shares higher. Again, hung up on the technicals and fully comprehend the naked shorting manipulation that has taken place. So So that is very, very interesting topic of the conversation. You gotta realize that there's a lot of manipulation going on in the market, not just because of the technical analysis. That obviously there's a manipulation, but then you go read the news. Like you're saying that you are focused more on the technical analysis, and a lot of us are. We're doing both. We're doing some reading of some most recent news articles about a specific stock, and then we can do some technical analysis on the side as well. But if you're just solely focused on the technicals, you might be missing out the point that like what's going on the side, right? We have all these big charts, right, and corporations that are buying out or shorting the stocks, and they're putting all these different how do I even phrase that properly? Commitments on the PL level, right? So on the PL chart right here on the you can see where the volume and how many buyers are expected to buy that specific price, that specific stock at a specific price, and they're putting up a ton of different shares, but those are fake reserved shares. That creates an enormous squeeze, right? Because the people who are investing into that, they're saying, oh, these people are willing to sell at this price, or they're willing to buy at this price, and I'm going to jump in onto the stock just because there's other like hundreds of thousands of shares that are reserved to be purchased at the higher level, right? To cover up some puts, to cover up some calls. And so the gist of that is that it's just like the Federal Reserve, whenever they say that, oh yes, we're going to prop up the stock market, we're going to buy out some of these individual stocks, and we're going to invest, we're going to make sure that, ETFs are getting invested into and S&P 500 is getting invested into. We're going to buy these stocks. As soon as those news come out, they don't buy anything. People start buying because the Federal Reserve said that they're going to buy. Same thing is happening with all these meme stocks. We have big sharks, right? Big corporations, big hedge funds that are saying that yes, we're going to buy it. Just not through the articles, right, that they're releasing, not through like YouTube videos or anything like that, but they're just putting those positions, reserving those shares to be bought at a higher level or to be sold at the lower level, making you think that, oh, like this is a great time to invest, and creates a lot of volatility, creates a lot of opportunities. It's not bad, it's just, it's not good, it's indifferent. It's, if you're investing into companies like this, like you're expecting to either make a ton of money or just lose a ton of money. So all subjective, but very cool. I like technical analysis, I think, as much as I like reading the news. Actually, I think it's like 60-40. Technical, I think, is 60 for me. But very cool. Thanks for sharing. Again, if there's any other stocks or any other companies that we want to chat about, or if we want to continue talking about AMC or GameStop or any other meme stock, I think there's a couple of other companies out there that we just haven't talked about that also skyrocketed like by 60 and 50%. So we can chat about those later too. Shares of AMC dropped 6.7% on Friday, but held onto a gain 83% for the week. That was extended by the stock's gain for the year of more than 2,100%. Its daily average trading volume this week has been more than tripled into 2021 average. S&P 500 meanwhile has waffled in a narrow range as investors praise signals about the inflation in the labor market that could feed into the Federal Reserve next moves. The benchmark rose 0.9% Friday after the monthly job report showed employers added 559,000 jobs in May. Fewer than the economists have projected, a snippet of evidence that could weigh against the Federal moving up its timeline for raising rates or easing back on bond purchases. Okay, cool. AMC. So look at this chart. Daily volume of AMC Entertainment shares. Daily volume. 1.2 million shares were trading on January 27th. And we are continuing to go up on the volume here. That is insane. June 2nd, 766 million shares were traded. And I believe like 1/10, like if we compare it to some other major companies, for instance, British Petroleum, that is, I just remember it just because I looked at it. I think it had like 12 or 16 million traded shares. So yeah, not not a crazy amount in comparison to AMC stock. So gotta ask you guys, gotta remind you that if you're watching this, don't forget to smash the like button and subscribe. I'm trying to get myself to 1,000 subscribers so we can do this more often. So yeah, just hope you guys enjoy this. Hope no pressure at all. All right, so Friday was the 10th consecutive day without a 1% move in the S&P 500. The longest streak, such as span from late April into May, according to Dow Jones market data. Trading volumes have been tepid as well during the holiday issuance week. About 1.4 billion New York Stock Exchange listed and Nasdaq listed securities have changed events on average each day this week, down from the 2021 average. This whatever, this doesn't matter. This doesn't matter. So much about the interest in the thoughts companies. At least 6 trading day of AMC to the 6 trading day of GME from January 22nd on January 29th. I'm down. Let's chat about that. Yeah, give me 1 second. So AMC has been third most active traded stock in the AMC has been the third most actively traded stock in the United States market in 2021, trailing only cannabis company Sundale Growers Incorporation, SNDL. Let's check out SNDL real quick. Let's see what they're up to. SNDL. Oh, okay. All right. So that's, yeah. All right. Fair enough. There's a lot of volume. Fair enough. Yeah, definitely on the, you would think on the oversold side, but the company that has been selling off for the past couple of years, kind of hard to justify buying into something that is still trading below 20-day SMA. There's 180-day SMA line is nowhere to be found, so stay away from this one for now. I would stay away from this one for now. So just yeah, just a fair share of warning, but very interesting. SNDL used to trade even more often. That's crazy. All right. Let's compare it in the last 6 trading AMC to the GME. So thoughts on comparing the last 6 trading days of AMC. January 22nd to January 29th. Where even? All right, January 22nd. So right here somewhere, right? Let's see if we can do. I don't think I can even. I think I would need to go to Yahoo Finance to get this done. I think you can input interval. No. Comparison. Where does it say from which date to which date? It doesn't say that. All right, whatever. Yeah, we can just scroll like this. Let's see. Oh, this is United. It's gonna be interesting to see what's going on with that full screen. And we are searching for January 22nd. All right. Oh wow, yeah. So you're okay. I got you. I see what you're trying to aim for. So I see what you're trying. Like you're trying to find a comparison, right? Like whether the company is going to get down to 50% from its highest price, which was about $62 a share, and whether it's going to come down to about this level. It doesn't necessarily work the same exact way right now. Like you can see a lot of similarities just because of the high increased volume of trading. But let me show you something from a slightly different perspective. I'll explain the mentality that I have on on finding the stocks that are about to blow up and whether it's a good idea to invest into something that has already like reached its peak per se. With these companies, well, two things. First thing, with these kinds of companies, you literally have to play it day by day. You don't know what's going to happen. It's out of your league. Like it's only the company itself that can release some sort of news that will act as a catalyst. But again, they act as a catalyst, bringing more volume, not necessarily bringing the price of the stock up or down. Even if those are good news, for instance, actually no examples. Just let's just leave it at that. Even if those are good news, the company still can plummet. Even if the company has reported positive earnings, they can still plummet. You know that. I know that. We've seen that before with other companies. If you are trying to figure out what exactly is going to happen based on the previous pattern, like based on the previous explosion of this specific stock, I would caution you against that, just because it's most likely not going to repeat itself, and I will explain why. You can look at, I mean, we can talk about Bitcoin, right? But no, it's let's look at Binance real quick. Let's look at Bitcoin chart. Let's pull it up full screen. I don't know if you were here when we did like a quick comparison of both of these stocks, right? Both of these charts. But you can see a lot of consolidation, right? And you would imagine that, let's see if we can do a longer chart. Chart trading view. I don't know why it's not showing the rest of the chart, but anyways, I'll preset it up later. You can see where Bitcoin ended up consolidating for a long time, and then it finally broke through, right? So we saw a very strong consolidation. It was about to get ready to blow up and then started to go up. If we look at Gamestop, again, or AMC, same thing. A lot of consolidation right here, right? And then about to blow up. So we see a higher price, we have about, again, consolidation starting to trade above 120 and 20 and 180 the SMA line, and start to blow up. Boom, thousands of percent up. Again, thousands of percent up. Whether it's going to continue to go up or down, that's just that was a rant. The gist is nobody really knows. Like, there's not a way to figure it out up until like the last moment when it happens. And then if you're a day trader, swing trader, scalping, you will use your technical analysis, you will seldomly use your news to determine where the price is going to go, just because everything is happening in the moment's notice. If you're trying to profit on something on the short term, you would want to be very, very careful with trading this one. It's way overextended right now. There's a ton of volatility. You can see, I mean, you can literally see it literally anywhere. So it's different. I very much doubt that it's going to repeat what had happened before, like perfectly. I think if I would have to make a prediction of what's going to happen, is I do think that it's going to continue to go down, and it's going to continue to go down for a while. With its peaks and valleys, I very much doubt that it's going to make higher highs from where it's at right now, just because the news had already came out. And from personal experience, is that once you see a ton of news on, again, Wall Street Journal, all these social media platforms, everybody on YouTube is talking about it, lots of investors are going in. So when we had few people investing into it and buying lots of shares, those people need to cover up their positions, right? They need to sell to somebody. They cannot just completely close their position because they're not going to profit as much. They need new influx of new, fresh money. And when population, people are around the world that are reading all these news on social media platforms, in, again, like platforms like Wall Street Journal, Yahoo Finance, CNN, ABC, you name it, then the influx of new money comes in. Then the big sharks start selling off. So it's hard to play against it unless you're doing it day by day, or just buying it like right here at the very, very beginning and just holding on to it. So it's just it's a difference. I see what you're trying to do, but a very, very interesting aspect, I guess, approach. Now let me know if I was completely wrong, and let me know what you think. But let's see what else we can figure out. Let's see what else we can find. AMC Entertainment, but volume can still be increased on AMC, that's for sure. Volume can still bring a lot more volatility, a lot more opportunities for upward growth or downward trend. So on Friday, Cinema fell 16%, while Naked Brand dropped 15%. GameStop, the original favorite of Reddit crowd, slipped 3.8% Friday, but still rose 12% for the week, extending last week's 26% rally. The stock, which is up more than 1,200%, this year surged as high as 483% in an intraday basis on January, between falling back to earth and hovering near 40%, $40 a share. Investment professionals have cautioned that the week's hot stock are risky play. Even AMC agreed in a filing Thursday with the Securities and Exchange Commission. And companies said the current price reflect market dynamic on Reddit business, and that investors should be prepared to risk losing their money. Yeah, so the company had basically said that they released the news, they released more shares of the company, they diluted their shares, and they had also said that, hey, our stock is pretty much overpriced, so be careful, prepare to potentially lose money. We just read that in the previous article too. So the meme stock rally is not too dissimilar to a typical pump and dump, which tends to hurt the retail investors. Again, we just said that, right? So when the news come out, retail investors come in, they see the hype, they want to invest into something like that, and they end up losing money because that is the influx of fresh money that other investors who were here at the very beginning, very forefront, they have a lot more capital to invest and a lot more leverage to use, and they take advantage of all of these retail investors. So it's going to be very, very careful with that. Said Joanna Wait. Senior research analysis of their front investment advisors. Those stories don't tend to end well. Fair enough. All right, that's all right. That's not a very interesting article. Useful, but not super interesting. Closing a record after jobs report. Oh yeah, I'm actually very curious about the job report. Let's see. So Dow Jones, rose Friday, posting the modest weekly gains. I feel like jobs reports don't even make that big of a difference anymore. I feel like people had used to looking over the jobs report, expected job report, but retail investors don't really care about that any longer. It doesn't really make a lot of difference. While everybody's focused on GME and AMC. If anybody else has just tuning in, feel free to subscribe, feel free to leave me a comment. Let's review some of the stocks. I want us to find some penny stocks that we can, again, get a spread and find potential for profit. I think it's going to be very interesting if we find some penny stocks today. I'm very curious if we can find those. I definitely want to learn and observe as much as I can during this craze with all these different hyped up stocks, just to be more prepared for something that is going to happen in the future. I'm positive with lots of penny stocks. We can see those agricultural stocks as well. We can see a lot of that happening like on a regular basis. So I think it's going to be great. Let's see. Job report can be pivotal. Let's check on interest rates. Interest rates, usually I do interest rates chart. We'll take a peek at that one. We'll take a peek at FLGC in a second. Mortgage rates, Freddie Mac, mortgage rates are doing, because everything is tied up together. Just like if the interest rates continue to go down, we'll continue either hovering around the same price on S&P 500 with the rest of the stocks, or we'll just continue to increase in value. But it seems like when it increased just a little bit, but it seems like it's still going down. So there's nothing to be worried too much about. But with yield curve chart, let's see, yeah, 10-year okay, and it seems like it's about to go up. Okay, sorry, so I'm speaking in code here. So we're again still in a recession. So interest rates, or I guess like 10-year treasury bonds, are yielding a lot less in comparison to 2-year treasury bonds. Yeah, we're still on the middle of the recession, according to this chart. Still continues to go up. What it tells us is that we just kind of have to be very, very careful with investing long term with all of our stocks, especially with S&P 500 hovering at around all-time high and just not going down, not really, just constantly inching up, making higher highs, but nothing too crazy. All right, we're not gonna focus on that too much. We might come back to that later. I do want us to actually take a look at this one, FLGC. No, that's right. FLGC, there we go. So 153, almost 54 million. So $3.60. Let's see what we can find. There's not much of a history of this company. So what I would like us to do is I would like us to find a company, and I'm gonna use this on the right hand side. I want to find a company that's a penny stock, preferably penny stock, with a low market capitalization, which we can find through FinWiz. I usually just go into where is it? Just home and then screener. And then you can punch in all the exchange market capitalization, dividends if you want some dividends, and then industry, country, whichever price you want, and then it's going to give you a list of those stocks. We can go over that later to find some other ones. But FLGC, not a lot of history, not a lot of volume. I would want to see some consolidation, some enormous 1,000% spikes, and I'm pretty sure we can find that. Also, I don't know anything about this company. It's probably floor growth into UK. Okay, sales, international business, closing public offering, just recently went public. I don't really want to invest into the most recent SPACs, the most recent IPOs, the most recent, just publicly released companies and just in general, and just based off of Coinbase. If you look at Coinbase, one of the most talked about, can't multitask. One of the most talked about IPOs this year, and the company came out on the market with valuation of $400 a share, and then it's trading at almost 50% lower than that right now, despite the fact. And then obviously there's different correlations between cryptocurrencies going down and this specific stock making money off of the cryptocurrency volume and trading and things like that. But you just gotta find something that has been proven by time in order to at least swing trade across multiple months. NASDAQ IPOs with under 25 million offerings, FLGC fit the criteria, but it was a DUD so far. That's fair. That is fair. That is fair. FLGC. Yeah. Doesn't really offer too much. I would read the news on this. So 500 gain within days of IPOing. IPOing. That's a cool way to say it. Let's check those out. I'm not familiar with. I don't think any of those companies. OCG sounds familiar though. Let's see. WNW. Let's do full screen real quick. So low cap. Okay. Beer. Oh wow. All right. I see what you mean. Okay. So IPO'd right away. Following day increased in value. Yeah. Lots of potential. Lots of profit. I can see. How? Share with us here. Share with us, how do you find those companies? Like, what do you search for? Like, what kind of tools do you use in order to find those IPOs? Like, I would assume you're not just, on Wall Street Journal reading the list of IPOs that are going to come out. There's lots of different ways, lots of screeners. So go ahead and share that with us if you don't mind. But yeah, when it comes to these kinds of IPOs, this kind of volatility, you got to be prepared. Like, you got to be available during the day as soon as the market opens. You got to be willing to handle those fluctuations. Like this, 500% gain or whichever percent gain you experience with this specific company, like, it was erased over the next couple of months. So is it possible that the similar thing is going to happen with, every single pump and dump stock that we're seeing on the market right now, like AMC and Gamestop? Maybe. Possible. So we'll see. Definitely going to read up some news and absorb all of this. So WNW was the biggest IPO in 2020. Another interesting thing is busted securities with underwriter for quite a few of them. Interesting. So go figure. Make connections, right? Like, reading all of these news, reading the details about these companies that are IPOing, seeing who is the underwriter, kind of makes some gears spin. Yeah, I'm not about conspiracy theories. I'm just trying to understand. So OCG, okay, another one, very low cap stock. So beginning of 2020, ended up IPOing, $3 a share, the lowest price at which it used to trade. Lots of volume here, pushed it up to $14 a share. Look at this for a second. Like, can this kind of increase and then decrease can be considered a manipulation? I would say yes. Can we look at AMC and say that, okay, AMC has gone up and then it dropped down, right? And then consolidated for a little bit. Here, there's no consolidation here. It's just a valley. And then ended up making higher highs, and then just for the next couple of months just continue to go down. Like, I think that would be the most common, price trend to see with pump and dumps with all of these hyped up stocks. So go figure. So OCG, let's take a so we'll just looked at OCG. They don't offer any dividends, so $4.8 a share. The company has offered some volatility. I like it, but at the same time I don't, just because there's not a lot of volume, and there's only one this increase in value, and ever since then the company has been dropping for the most part, right? We saw a little bit of consolidating for the past couple of months, to be fair. So IPO the same day as WNW and did nothing during the market. It only started spiking after hours and seemed to be symphony play to what WNW did earlier. Yeah, I mean, that's fair. Yeah, so market hours, gotcha. Yeah, so again, lots of volatility. Let's see what other kinds of companies we. No. This is cool. Let's find some small cap stocks. Let's see what we can find. The ones that existed for a while. No, we don't. Let's do small cap. Or should micro? Let's do micro. Let's do micro. And let's do price under $1. Wow. An exchange, NASDAQ. All right, so only to pay. Nice, good. So we can easily go over this. This is not too terrible. And let's go ahead and look at the charts and see which ones are offering potential for growth. I like this one, BBI, We'll take a look at that one. I kind of, yeah, because not a lot of volume, but it seems like it's consolidating. I like this one. Consolidation, you know, still downward pattern. No. No, not really. No, not very interested. What is it? China Plastic Company Limited? Maybe we'll take a look at it. This one doesn't look too bad. DFFN. DFFN? What is that? DFFN. So, highest one $11. Lowest price was 20 cents a share. Trading currently at 72 cents a share. Let's take a look at a 180-day chart. So we're approaching this golden cross, right? So 20-day SMA line seems to be getting closer to 180-day SMA line. Not a lot of volume, definitely not something to invest into just because of the quality of the company. I mean, solely based off of the chart, solely based not on the news, not on the financials, just the technical analysis. And let's look at the, so 3-year chart. So it's been going down ever since like $8 a share. So for a year it was going down, all the way down to 20 cents a share. Let's look at so 1-year chart. I like the fact that it's at, okay. So I like the fact that it's getting closer to its, actually it got very, very close. It basically confirmed this level as a support by starting to trade above 20-day SMA line. We don't see, again, a lot of volume. We saw a ton of volume here after the company spiked up. And we saw a growth of about 100%. Maximum was about 180%. I do genuinely like the fact that this company is trading above 20-day SMA line. Let's do this. Create at or above and create an alert at or below. There we go. And at or above. Sweet. Let's see what else. And again, if you have some other ideas, some other companies that cross your mind, feel free to share. I'm just browsing, trying to see if we can find something. You know, let's find the next AMC. Let's find the next Gamestop. Not too terrible. Not too terrible. So far, we've been able to identify only maybe 3 or 4 different companies. So 3 of them mentioned on the chart, in the chat, and the 4th one is mentioned here on the screen. Seems like it's on the upward trend. I would want to follow up on this one. I'm gonna write it down just on the list of stocks that I want us to follow up on next time during the next stream. Let's see. So DFFN, and this is gonna be small cap. Nice. Potentially going up in value. Let's see. So 72 cents a share. Let's say that it goes up. Do we see a lot of resistance here? We don't really see too much resistance. We see a lot of consolidation. We see a resistance right here, potential resistance. And we do see potential for growth of about 20% up until the 180-day SMA line, which tends to act as a resistance or support, depending on where the price is trading at. So DFFN, we'll follow up on this one. Not the best one, but not bad at all so far. Let's look at, okay, so ACST. ACST would have been way better off buying it here. I like the fact that it's still trading above 180, still trading above 20-day SMA line, not a lot of volume. Investing like super long term, just forgetting about that money, might potentially play out well. If, yeah, way too much volatility for a long-term investing, I think, especially considering the fact that on the 3-year chart, the company is still below 180 and getting very, very close to 20-day SMA line, which previously it was able to act as a resistance. And yeah, I just gonna have to be very, very careful with this. In the perfect world, you would want this. I like the fact that MACD indicator is like slightly starting to point up. Once the arms, the legs of the MACD indicator cross each other, then that tends to act as a good catalyst for potential of the company's stock going up. And then with RSI indicator also not being on the oversold nor being on the overbought side, it's also pretty good. Okay, so I go to NASDAQ IPO website and search by offering amount. GME is the lowest offering right now, set to IPO on June 8th. Is the Chinese education company, which has been in a hot sector this year. Awesome. I like that. So going to NASDAQ IPO website. So nothing too crazy, like no like insider like information, you know, just like all, and that's perfect. It's all of the information that you would really need would be available there, like for anybody to access on NASDAQ website. You can see, I know that thinkorswim platforms or TD Ameritrade or Fidelity, they offer lots of different tools for those of us who are trading with it or investing with them. They offer a list of companies that are about to go public too. I believe that it's I don't remember from the top of my head, but I do remember that it's somewhere here. Somewhere here. Education, trade, analyze, monitor, charts, flexibility, product data. Let's take a peek at that one. EEIQ. $4.75 a share. Okay, so it just recently IPO'd. Webull for IPO. Gotcha, the list upcoming IPOs. Cool. Roger. Alright, so, okay, I see. So from $4 all the way to $18, and then again, like started consolidating and just like currently trading on $4 and 70 cents a share. So yeah, just lots of volatility for IPOs. But again, like if you're just investing, you have seen the companies, right? You've invested into the companies that went out in public, started offering their shares, and then all of a sudden their shares had dropped, you know, all the way from $8 to $4, like in no time. So 50% drop. And then on the other hand, like next couple of days went by and it goes up by, you know, all the way up until $18 a share. So very interesting. What was it, 600%? Some kind of IPOs, yeah. All right. Let's see what else we can find. So we have a stock screener. We have $70 in the pre-market and daily after the IPO. Whoa, $70.11. EEIQ. Was I looking at that EEIQ, right? I see. Okay, wow. Yeah, well, actually full screen. The maximum price I see is $18.54. It doesn't show the permanent. Oh yeah, I got you. Pre-market, on the pre-market. Okay, fair enough. All right. Let's see what we can do. No volume. This one had just recently dropped. AIHS. All right, so it's not terrible. It continues to make higher highs. It seems like there's a channel with AIHS. It's, again, like super tiny company, barely any volume, not very sustainable, like continue to go down. Nothing is stopping him from continuing to go down. The reason why I'm looking at it is because it's a penny stock. Let's see if we can figure out if this is a good company to invest into, and maybe there are some other ones. I just just so unusual to look into these kinds of companies. Yeah, so it's just it's interesting. It's very interesting. So ever since 2018, continue making lower lows. Not very interested in investing into a company that just continues to go down like this. It has its peaks, has its valleys. Lowest price it's been trading at is what, 29 cents? It's not terrible. It seems like it's pointing up, but nothing. There's pretty much here. This is the main support line here at $39 a share, which 39 cents a share. Pardon me, which is oh gosh, 58% down. I mean, yeah, that's penny stock, so 50% down. It's not too crazy. All right, let's see. Before we move on with the penny stocks, I really want us to talk about this. So let's talk about AT&T. Why not? 5-year charts. Let's look at the maximum chart. So with maximum chart of AT&T, so the reason why I want to talk about this company is just because I've been following up on this for a while and trying to read some news on this. I know there's like 2 other competitors, right? So we have T-Mobile, AT&T, and Verizon. So Warren Buffett decided to invest a ton of money in Verizon. Myself, I invested a ton of money in comparison to Warren Buffett into AT&T. And T-Mobile has been extremely outperforming any other company out there, and it's very hard to justify investing into them just because of those valuations. When we look at AT&T, we can look at their financials. They have a decent debt, but the most appealing thing to me with AT&T is that they had existed for a very long time. So when you look at the Yahoo Finance, ever since 1985, so beginning of 1984, the company started reporting their earnings and they started to build up this trend. We can say that currently it's trading at $29 a share, and they offer 7.12% in dividends, which is extremely beneficial for long-term investing. Let's talk about the price of the stock, right? So let's look at the full screen and see what we can find and whether we can find anything appealing to us on this chart. All right, zoom out, there we go. So currently trading in $29.27. $29.27. This is pretty much last couple of years, ever since 2014. I would say the average price is about $34 a share. That's where the major resistance is. That's where a fair share of support lines coming from, and we're trading at one of the lowest rates. Let's look at I know we're jumping all over the place, but at the same time, let's just focus on this for just a second. We have, I'm still losing a little bit of money on this position. Currently, the company is trading below 180-day SMA line, below 20-day SMA line. Earnings report is going to come out when? July 22nd. Is it a good time to start investing into the company that is continuing to go down, continuing to, have all these red candles? Financials don't look that good, while Verizon and T-Mobile are way outperforming, have way better financial balance, financial balances, basically balance sheets. Their 10K report doesn't look very good in comparison to those other major competitors, major companies. So it makes me want to wait to invest more into this company, but due to the fact that they offer that 7% in dividends, I'm continuing to hold my positions, even though it seems like we're still under a lot of downward pressure from 180-day SMA lines who got rejected significantly. Even though it seemed like it confirmed it as a support, news came out and the price of the shares ended up just tanking. And it's not going to be a significant percentage. I mean, it's 14%, but for a multi-billion-dollar company, that was a very significant drop. That still continues to happen. So there's nothing that is really stopping the company from continuing to go down, besides the fact that we can prepare ourselves for buying something. I know that I'm going to prepare myself for buying this particular company, because the next major support is going to be at $28 a share. So we are at $29.27 right now, which is about 2.61% of air up until the next support line. So with 7.5% in dividends, that kind of helps you offset the cost of holding on to the company for even a year, even if it continues to go down. So another, 5 or 6% of potential profit. So, but yeah, I am looking after AT&T, and I do think that it's one of those companies that still is extremely undervalued when it comes to the cellular providers, internet providers, companies. Let's take a peek at their competitors. We'll see what the difference is going to be, right? So we have AT&T with $208 billion, right? Let's look at Verizon first. VZ. Verizon is at 238, so finally surpassed the valuation. We'll look at the max chart. It seems like on the overbought side. Interesting. Usually with Yahoo Finance, if you see this kind of a pattern, you would expect that short, mid, and long is going to actually show positive growth. But there's not. It's hard to justify investing into something that had already extended so far, into the year, into its chart, right? Financials are good. Pay 4.38% in dividends, a little bit less than AT&T, but also offers more stability. It doesn't have as much fluctuation as AT&T. But let's look at T-Mobile. No, yeah. Yeah, there we go. T-Mus, there we go. Oh, I completely forgot all these ticker symbols. So T-Mobile is the lowest one when it comes to valuation of the company. So $180 billion, the lowest out of three. So $180 billion valuation. We have, what is this? Is this a price? Okay, yeah, this is a price fluctuation. So maximum chart, we can see that it's way overextended right now. Extremely difficult to justify investing into something that just is continuing to make higher highs. Also, very hard to argue against a company that continues making higher highs, is doing extremely well on their balance sheets. They're reporting very good earnings, and one thing that I don't like about them is they don't offer dividends. So therefore, it's a growth stock, especially when it comes to looking at their chart and seeing the most recent performance. So it's just a preference. I think it's just a preference. For me, I think AT&T is undervalued right now. I use AT&T personally. Hasn't been bad. They offer one of the lowest, arguably. You know what? I think AT&T is great. I think T-Mobile is great. I think Verizon is great. Financially, looking at the charts, looking at the dividends that they offer, I do think that AT&T has the most potential for profit out of all three companies, even though Verizon is doing pretty well too. Pre-market actions on the EEIQ. Yeah, GME probably. Definitely have to go give them some more water, but GME. Oh. Oh yeah, so it's a new IPO. That's why I don't see it right. Oh. GME. Okay, yeah. So it's a scheduled IPO. Gotcha. Cool. Yeah, you get it. I'm gonna add it to my list to follow up on this and to see whether it's gonna be a good day trade. I'm mainly focused on, again, finding something that is going to be a good long-term, or at least a mid-term, like 3 to 9 month investment. So with day trading, it's auto-correcting ZME. Yeah, ZME. It's gonna be. I'm sure it's gonna be interesting. I feel like every IPO is just raising so much money right now. So much money. Hey, I'm gonna go refill my water here in a second. I'll be right back. I'll be right back in just a minute. Brought some snacks. Let's go. Cool. Yeah, these are definitely just day trade ideas for, yeah, short swings. I agree. All right, cool. I like this. I'm liking this so far. We're making some decent progress. What was I trying to do? I do really want us to find something that spikes up like a ridiculous percentage. MKD, let's take a look at that. MKD. Alright, so it seems like, alright, this is just MKD. Let's look at a longer chart. $109 million company. It doesn't look very promising. 2020, all right. Yeah, it doesn't look super promising. Yeah, it has its peaks, it has its valleys, but the only reason why I'm contemplating is because This company used to trade at about 80-90 cents a share. I guess you guys can't really see this too well. So 83 cents a share. Right now it's also trading at about 79 cents a share. So it's confirming this this level, this price, as a support, which is good. But I would want to see a little bit more confirmation. Let's see if we can make sense out of this, right? So MKD. Right, so the lowest price at which it used to trade is 73 cents a share. Yeah, so it's still trading just above the previous support line. What are the odds of the company that it's gonna continue to, it's actually going to bounce off of this specific level? Rhetorical question. Let's see. 1 year chart. It's consolidating. I like that. I don't necessarily like the fact that it's been trading below 20-day SMA line, still trading below 180 SMA line, so it doesn't show a potential for a very large growth on the long-term scale, but potential growth and potential kind of like explosion manipulation of the market with increased volatility, just like it had experienced here, and in other places. It's very much possible. So let's see, how often do these normally happen? We have 57 days. 16 days, this is just increased volatility, 13 days, and major volatility is from previous top. Let's see, from previous top to here. Actually, let's do this. 212 days. All right, interesting, very, very interesting. Let's see if it's gonna make sense for us to invest into something that spikes up so much. Alright, so longer data, under supplies framework, management, okay. Stock strength is American data traffic, fine. Public accounting firm. I like this. I'm going to add this to our list of penny stocks. So MKD. I'll make a mark. I'll put a summary at the very end of the stream of the stocks that we talked about. There we go, MKD. Let's see what else. When we search for MKD, we're more likely to find some of the stocks that TS unlisted that are in the same niche. TS that listed a 30-day average daily volume of the stocks, then on color code and focus on extremely low volume stocks. Anything orange is good. I like that. I haven't tried that. I am going to have to check that out. Copy, paste in my notes. There we go. I like that. What I usually do in order to find those small cap stock companies, as long as I find one, I can latch on to the same niche of the market and then just focus on that by just finding the similar stocks on Yahoo Finance on the right hand side. They usually tend to do a pretty good job finding similar patterns, similar companies within the similar industries. So yeah, it works out pretty well for me. Those are the ones that are the most manipulated out in pre and post market. That's fair. That is fair. Oh, look at this one. Wow. Okay, so 10% up. GFU 394 million. has been going down ever since 2019, had found its support at about less than $1 a share, and probably about $1 a share, yeah, $1.16, 13, had spiked up just a little bit recently. Nothing too appealing here, but it even seems to be on the overbought side on the 1 month chart. But let's see what else we can find. Let's see if we can find, I don't want to go in circles with these companies. Yeah, it seems like it had found its support. Again, the company did not exist for a very long time, so we can really base our expectation off of the previous short history of its existence. No, nothing too interesting. Nothing too interesting. 29 cents. It seems like this one is coming up. Maximum history. So AIHS continued to go down ever since 2018, and the lowest price at which it's been was about 29 cents a share. So 36 cents a share, another floor, 42 cents a share, another floor, currently trading at 86 cents a share. Don't really like that since February it started making lower lows, but let's AIHS. Alright, I like the fact that it's trading above the 20-day SMA line. It seems like it's trying to confirm it as a support. Not a lot of volume. Definitely something to kind of like invest into and forget for a while. And then once it spikes up, then potentially sell for profit. As of now, 86 cents a share. Not bad. We can see 35% gain up until potential gain up to the next major resistance, which is going to be at around 180-day SMA line. If you look at 180-day charts, you can see a very strong support line. Come on, right around this price level, which was confirmed as a resistance, confirmed as a support multiple times, and then confirmed as a resistance again. Once it consolidated, finally broke through and just waterfall, bloody waterfall right here. Consolidated, finally found its support back at 71 cents a share, and it seems like it's inching up on this 180-day SMA line. So we'll have to be. I would like to set up alerts for this one actually. This looks promising. It kind of almost looks like a cup and handle formation, kind of like a smaller cup-ish at or above. And let's do at or below. Well, there we go. CYAN back in February, thinking that it had the potential to push up out of nowhere after the month of holding. It sold it when it was at 30 cents higher than the previous day close. Interesting. Let me take a peek at that one in a second. All these companies' ticker symbols, they're somewhat difficult to remember, so I don't know if we looked into that one or not. Alright, so we already set up our alerts below that. Another alert that I want to set up would be at or above the next major resistance. So as long as it's within this channel, it's safe for moves, right, for some volatility. So it offers about 20% profit, potential profit up until the next major resistance, and about 20% downward push, right, to the next channel. Cool. $4.20 AM was literally the first trade of the day. By 4:30, hit 9.97, of course. 15 minutes selling triple in 15 minutes. Yes, that's exactly what I'm expecting to find today. Just does absolutely nothing for months, and then all of a sudden just either Yes, like 20, 30, 40, 50%. I know there's a ton of companies like that. In some other streams, we got some other ticker symbols that were very much like ready to explode, because it was just about time for them. We'll find them. We definitely will find them. It's just a matter of when. And the 3-year chart. Okay, no, I just got to be hopeful about this one. All right, so oh yeah, we saw that CYAN. That's the one that we wanted to talk about. CYAN. Oh wow, yeah. Nice. Good. Yeah, so it did up. Yeah. Peaks and valleys, didn't have a lot of volatility, didn't have any volume whatsoever. Finally got increased volume, and then $6.29. I'm sure, yeah, so you said that $9.87. Yeah. I'm sure it skyrocketed. It doesn't even show it here, just Alright. It's actually not in a bad position right now. The fact that it's consolidating right underneath of 180-day SMA line, it's not the best spot, but I like the fact that it's trading above the 20-day SMA line. It's inching up on the 180-day SMA. Let's zoom out real quick though for 3-year chart. On the 3-year chart, still above 180. Below 20, which is not like a major deal, major resistance. It has been a major support, kind of showing what the trend line is for the company. And once the, again, golden cross happened, that's when majority of volatility came through, and that's when the market basically exploded. So pre-market TOS, looking back months ago, I think I should be able to let's see, talking about 987. Yeah, I got you. I can see it. I trust you. Like I just, on that chart, on that specific chart, it wouldn't be it wasn't showing it. But yeah, that is insane. Absolutely crazy. If you have the ability to sell during the pre-market hours, then you're golden. Majority, absolute majority. I think I read an article about this. Like 67% of money was made over the year of 2020 on the markets in the aftermarket hours. All right, very cool. Very cool. Let's see what else. EBK. Not bad, seems to be a little bit overpriced. Let's see what else. $2.10, used to trade at $21 a share. It seems like it's slowly coming up. What is this company? HGS Real Estate. Okay, so real estate, kind of like a trust fund, most likely. Don't really want to invest into a trust fund overseas. No, something similar to this, something that does absolutely nothing and then just overall spikes up, you know, goes, yeah, like a 100 or 200% higher. I did not mean to click that. Yeah, okay. There we go. I think that might just be the company that we were talking about. So it does, again, absolutely nothing for a year and then just spikes up out of the blue. So he's currently trading at $10 a share. Maximum he used to trade at, what are these valuations? $500 a share. I think people had just forgotten about it. The lowest one was, the lowest price at which he used to trade is about $2 a share. Let's what is this? Super small cap, so $63 million company. So Greg Energy Corporation in China. All right, that was a wild ride. Yeah, okay. I bet. I don't think I'm familiar with this company. So looking at the 3-year chart, yeah, sure, it seems like it's getting more attention. Like it seems like it's trading above this 180 and the 20-day SMA line. It already looks like it's on the overbought side. Over the course of last year, they had 1-to-10 share reverse split. So that's interesting. Okay, so let's do Yahoo Finance and let's look at the full chart. Yeah, again, out of the blue, like we are trading at about $10 a share here, $12 a share, and all of a sudden the stock increases to $58 a share. That was in 2017. So November 9, 13, all of a sudden it's $53 a share. The lowest again is about $2 a share. So if you're holding, gosh, what is this? $500 a share. I mean, that's exactly what we were talking about. There's barely any volume. Basically don't do almost anything with the company, and then all of a sudden it just spikes up, and like it seems like it's on the rise right now. It seems like it has its own trend line where it hasn't broken its trend line. Just kind of visualize it. Let's see if we can draw it. Yeah, we wouldn't miss it if we put it like this. Yeah, so it's still above this trending line, but yeah, that's pretty cool. How was your experience, by the way, of with Craig? I'm gonna have to add this one to the list. It looks very interesting. It looks very, very interesting. It looks like it's about to break out too. I'm gonna draw this trend line here and point out what I'm paying attention to. So this upward looking flag pattern, as long as it consolidates here within this within these two trend lines, then we're sort of safe. But as soon as it breaks above it or below it, there's a lot of air underneath of that, so it's about 64% loss, potential for a loss, and then next resistance. The resistance doesn't seem to even matter at this point, so about 40% higher, which is the previous high. And for this specific stock, yeah, it doesn't seem like there is it seems like it's experiencing a parabolic growth. Like this trend line doesn't really account for the growth from previous couple of years, right? So it's just some sort of catalyst happens, then it just skyrockets, goes up to $400 or $500, and then just tumbles for the next couple of years. Wow, in 2006, 2007, the company, yeah, stock was at about $23, $24 a share. Had established that as a ground floor for a while, but has not been getting that much attention recently. Very interesting. Let's see what else we can find. Maybe we can find something within the same realm here from Yahoo Finance. Their earnings just dove, so negative 66 million. KBSF, maximum chart, also $13 million valuation. Nice. Let's look at 5 years. So it used to be at $6, used to be at $3, $1.67. I like the fact that over the past 5 years, like ever since April of 2020, it had started to come up, slowly making higher highs. Like it's interesting, but it's not super promising. Let's see what else we can find. Again, similar pattern. Yeah, we're finding all of these similar pattern companies, which is good. We just need to see if any of them had spiked up enough for us to pay close attention to them. These valuations are crazy. There's no volume. Somebody else is trading at no retail investors are really taking part in this. Then 2017, so it's trading at about $2.54 and then spikes up to $8. Yeah, so these are basically the spikes that I'm talking about. These are kinds of companies that I've wanted to look into and see if there's a benefit in investing into those. I like this flag pattern that follows the trend line, but at the same time, it's hard to justify investing into something that is so volatile. It's super difficult to justify something like that. $3.39. All right, let's no, net interest rates, where did it go? There we go. So $3.37. Super, okay, so $2.85. Super low valuations. I feel like my brain is just melting. These are unusual companies to look into. These are very unusual companies to look into. That is not something that I normally look at. I usually try to invest into something, not necessarily a blue chip stock, but more so less volatile, more so finding something that has the most volume, the most value, the most potential for growth. Right now, it's just about trying to find something that is super undervalued, spikes up every once in a while, and maybe is trading at its all-time low. And maybe we can buy a ton of those kind of shares. Let's do that. Let's see what else we can find. I don't want to convince myself into a certain company. I want to find something that is cheap, but at the same time, and I'm gonna just scroll through the cheapest ones so we can get to like super cheap stocks. What is this? 5-year max? No, just continue to go down. Has a story of explosive growth, but consideration currently up right now and about 400%. Okay. INVO. Good. Let's look at that one. Okay. Yeah, I see. That is exactly what I mentioned a couple of, I think about an hour ago when we talked about these kinds of companies that just spike out of the blue. So $9.4 a share. So potential for growth would be just doubling the money that you invest into it right now. Let's see if we can see more of similar spikes. Let's see if we can find companies that are in the similar category, I should say. INVO. That's good. I like that. I like that. There is a company that went bankrupt, and I received some sort of a share that replaced it that I held, and I'm still holding on to it because I don't think I have. I do think that I have the ability to sell it. I just did not need to do that for a while. Let me find the ticker symbol for that company. It's very interesting. All right. Looked into this one. $2. All right, no. All right, let's see. What is the ticker symbol of that company? KY. Okay. KY. SRW. SRW. KYSRW. It doesn't. Okay, all right, so that is probably a super tiny company now that is just replacing something. So KYSRW, KYSRW, Key Energy Service. Yeah, so it was an oil company that went bankrupt, and I'm curious to see what kind of stock is this, because it spikes up like thousands of percent in the aftermarket hours. Yeah, again, has no data. Corporations of warrants. Interesting. I'll have to find it. I'll have to do my due diligence on this. This is because it's super weird. Like, you can see that this company, the 52-week high 35 cents, open 0, day high 0, previous close 0.028. So very interesting. I'm sure there's no volume, no trading, but somehow just, you know, using Thinkorswim on the phone, you can see all these like 10,000%, like your portfolio went up 10,000% today on that specific stock, and you're like, well, let's try selling it, and it doesn't allow you to sell it because it doesn't update it on time. But AAME, oh yes, I actually do remember that that it takes more letters to find those kinds of companies. So you're saying, so I swear AAME and AACG are the epitome of those low float stocks. Just around for no reason. Early February, they both are extremely hard and massive volume and literally no news. Yeah, we'll check that. Yeah, that's fair. I said they were manipulating those stocks just based on the alphabet. It was A stock symbols running for a week in February. That's funny. I honestly, like, if that is that absurd, like, I would not be surprised at all whatsoever. All right, so I like that. If it would be trading lower, so I'm gonna zoom in on this. If it would be trading at about 75 or maybe $1 a share, then I would consider adding this to the list of companies that might still have more volume and like might still have more potential to invest. I absolutely love the fact that the company had existed for a very long time. They do pay 0.46% in dividends, so clearly it's a well-known enough company to be Atlantic American Corporation. Okay, that sounds so familiar. Atlantic American Corporation reports fourth quarter year, and is this like a firm's credit rating? Atlantic American Corporation subsidiaries. What kind of investing? Most banks of high corporation. Bank of Hawaii Corporation. It sounds like a Not sure what this company is all about. Corporation reports second quarter results. Corporation second quarter 2020 financial results. Bank of Hawaii. Alright, I don't think that's a Bank of Hawaii. So let's look at the full screen here in a second. Alright, so again, 1991 all the way up until 1998, 1997. For 6 full years, the company has been going up. That's so weird. All right, so some sort of news happened in 2020, and the company just went parabolic, just crazy. From $2.40 all the way up to $5.70. So 200% gain. That's not bad in no time at all whatsoever. Definitely seems to be on the overbought side, just considering the previous highs. Like in 1997, previous high was $5.30. $5.20 back in 2007. Now was able to again to recover $5.70. So yeah, when it's getting closer, 1992 and 2009 used to trade at 50 cents. Now and the highest one was about $5. And no volume, there's no volume at all. I mean, there's volume, there's just no volume. It's at 16,000, and here there's a ton of volume just because it attracted a lot of speculation. So 73,000, 1.5 million shares being traded. Yeah, very cool. All right, let's look at the second one. AACG. I'm excited. These are good ones. Yes, this one is also doing a very similar thing. So it used to trade at about $4.30, also existed for a decently long time, so about 13 years or so. Doesn't pay any dividends, $102 million valuation. Seems to be on the overbought side just based on the financials of Yahoo Finance. 3.24 cents a share. Used to trade at about 388. That was the floor. I'm afraid that it would act as a resistance if the company tries to push higher. If I would want to invest into something like this, like long term, I would definitely want to invest into something like that at a $1 valuation. 324 is a little bit way too high for this, but let's see what's suggested to us on the side here. All right, way too steep of a downward curve. Let's see what else. This one seems to be rising up just a little bit, nothing too crazy. Spiked up here and there, again, $2. We can do better. We can definitely do better than this. So $4.85 right now. This company didn't exist for a very long time. Nothing stops it from going down. This one seems like it's recovering. 155 million valuation, so 779. It seems like it's continuing making higher lows, but it had already spiked up recently. The previous spike was in August of 2020, then February 2021, March 2021. Now, if I would have to say something, it's probably going to continue selling off, or at least consolidating at the same level. And yeah, barely any volume. There's so much manipulation on the markets. It's just, it's very interesting. So for a while, low float stocks would spike out of nowhere at the pre-market open. I'm assuming people were buying out the shares while it was consolidating. You know, they can manipulate it pre-market. Yeah, absolutely. I think that is the correct way to view it. Yeah, we'll take a look at that one in a second. Yeah, there's lots of manipulation with those kinds of companies, and it's out of retail traders' hands. We can only really look and take advantage of it here and there, but nothing really comes through for us too much, you know. So that's why whenever we get together, or whenever we start manipulating a stock like AMC or Gamestop, that's when, you know, the apes are strong. But right now, there's way too much manipulation. ASRV. $2.40. Yeah. This is really that's kind of cool. So 1998, the company was at $26 a share, 2.4% in dividends. And let's look at their full screen chart to see. So February 25th. Oh, Yahoo Finance is not going to show it. Let's do ASRV. Oh, $5.34. Let's do this. Whoa! Yes, that is an epitome of a closed market, you know, pre-market hours, after market hours valuation. The company is peacefully trading at $4 a share, and then, you know, it spikes up to $20 a share, and then all of a sudden it just like drops down and then starts selling off, and then once the market is open, it's pretty much at where it was the day before. Yeah, very cool. Very cool example. A few others that jumped exactly to $20 pre-market. Yeah, pre-market open. There's plenty of companies that had done that. So yeah, it's just let's take a peek at AMC again. Let's just look at this. All right, so with AMC, right? Even if we are taking into consideration our just basic, very basic breakdown, right? Technical analysis of like a long-term investing, or even an average medium-term investing for a couple of months, we can see that the company is used to trade above 20-day SMA line, still trading way above 180-day SMA line, but it finally has broken below 15-day SMA line on the intraday, on the aftermarket hours. So this is Saturday candle. So depending on where this candle is going to be on the market open on that Saturday, that's exactly what I'm saying, that it makes so much sense to do these kinds of valuations on Friday evening. That's exactly what we're scheduled to do here on this channel. You can like go back into my channel and you would see that we're doing the streams at 7 p.m. Eastern time to make sure that we can catch those different fluctuations, valuations, you know, through FinWiz. They show us the most recent updates of the aftermarket hours, and we just manually find our AMCs and our Gamestops through Thinkorswim or through any other platforms that you guys use. So that's so interesting. I'm very curious to see what exactly is going to happen with AMC, and I would not be surprised at all if it's gonna spike up above or at least close to $57 again. Would not be surprised at all whatsoever. And then actually, I kind of wanted to look at GM. It's completely different. Something completely unrelated. I'm pretty sure a majority of us know that GM had announced that by I think by 2025, their fleet is going to be all electric cars, that they're trying to just work on their electric cars. They're trying to deviate from gasoline, you know, internal combustion engines. GM, extremely overpriced. But anyways, that's not what I wanted to look at. I think it's GME, right? GME. Yeah, so Gamestop. Gosh, Gamestop. It's such a weird time to live through with all of these different trades. So $19 a share, just peacefully trading, goes up to $513 a share. Right now it's consolidating at slightly below the 20-day SMA line. Let's look at a 20-day chart. It's not a bad chart. It's just we don't want to lose a momentum here. It reminds me of cryptocurrencies so much. So much. GME, from my perspective, again, way overpriced right now. I do think that the next move that it's going to make on Monday, on this upcoming week, is going to be most likely within those two channels. So I'll draw the channels that I'm visualizing. Well, this should technically be the channel, and that's when we saw the move. Yeah, so this is when we saw the breakout. So I would not be surprised if it goes down to about $190 a share and consolidates and either breaks below it or above it. I doubt, unless some crazy catalyst is going to happen and we are going to get lots of not even retail investors, but hedge funds investing into these companies that are, or like Wall Street investors who would just pile a bunch of money into this company, then I very much doubt that it's going to continue going up. I do think that it's possible that it's going to consolidate at around $200 share value, but or even 180. But I very much doubt that it's going to continue increasing value like it did before. And AMC might just repeat the history of GME. It's very possible. Let's see what other companies we haven't talked about, the interesting ones. I have a ton of different stocks, a ton of different stocks from previous streams that we have not followed up in a while. SGT, I think SGT, did we talk about? No, we didn't talk. Yeah, so I bought this one at 423, 423, right around here on a different account. That's where you wouldn't see it. But the reason why I bought it is because of the golden cross and of the triangle formation. It's just a note that I have on my phone. Yeah, so perfect timing. That's yeah, no, that's probably less than 36%. Yeah, so about 20% gain currently. Good, very, very good. Seems to be on the overbought side right now, so I wouldn't worry about it too much. SBR. SBR, I do remember talking about SBR. SBR was undervalued for a very long time. There's one trend that I can see on the markets right now, and that trend is real estate investment trust funds and some other companies across the entire S&P 500 or Russell 2000 have a very similar pattern of where they dropped by about 80%, recovered either about 50 or 30 or 40% or even just 10% of their previous value, and is building up this triangle that seems like it's going to continue to go up. I'll visualize what I'm talking about. MITT is an epitome of this kind of stock, right? So they're forming up this triangle that continuously making higher highs, trading above 15-day SMA line, and it seems like it's about to build up, and it seems like it's about to start breaking out. There's a lot of room for growth. 155% of growth potential up until the 180-day SMA line. We have 255% potential for growth over to the next major resistance of the previous price level at which you used to trade. This is not the very first real estate investment trust fund that hasn't been able to recover properly, but I think it is very very cool to kind of like keep it on the radar. Depending on which markets you're investing, I think real estate investment trust funds are going to be able to provide a good diversification for the portfolio. Not suggesting you anything, not a financial advisor. This is just for entertainment purposes only. All right, let's see what else. I have a PK written down. I don't know if I misclicked, but that's a good stock. All right. I like the golden cross. I don't like that it's trading below both of those indicators. We'll take a look at those in just a second. I like the fact that this was on my radar, but I haven't followed up on this. I'm definitely going to set up my alerts for this. At or above, and let's do at or below, create, and then again at or above. All right, so golden cross, we're good. It seems like it's a good indicator for a potential push up. The company is trading just at the level of its previous support, which might act as a resistance. There might be a lot of resistance actually for this company, not because of the ceiling that it has been created by the previous lows, but also with this golden cross. Even though it's a good indicator, it's still acting as a very strong support or a very strong resistance. In this case, it acts as a very strong resistance, and plus we have lower highs as well, so not very exciting at this point. Overall, a good stock, lots of volume. So let's look at TELYB. Yes, this is crazy. Yes, these kinds of companies, these kinds of stocks that experience almost no volume, barely any, just gaps. There's not even a normal chart. It just opens up wherever it wants it, wherever it wants to, and then it closes where it desires as well. And I'm pretty sure, let's look at a 100-day. Let's look at this. I mean, no, at the very beginning of the day, yeah, it spikes up like crazy. Yeah, 100% up. And then next following couple of days, it's still experiencing 20, 30, so double, sometimes triple digits. Let's look at a 1-year chart. Yeah, it would experience 150, 147. The highest one, it was at about $90 a share, so 500%. I would want to see a little bit more volume. These are good, extremely volatile. Is it the best time to buy it right now? I do like the fact that it's consolidating, but I do think that the floor is going to be lower. I do think that the floor is going to be about 10 to 20%. Yeah, probably about right here. About 22% lower than the previous price. Let's see. Duo. Duo sounds very familiar. Oh no. What is this? Let's see. Okay, about 100% up. Then again, another super large spike. About 65% up. And is that in pre-market hours or no? It's at the very beginning of the day. So as soon as it opened up, it spiked up and then it started selling off. Okay, right? Yeah, so we had time to buy into it slowly and then start shorting, long-term shorting. Yeah, I miss scalping. I miss day trading. I might get into that. I love the fact that you can so easily identify where it's going to bounce off of the middle view up and bottom view up. So very cool. Actually, let's look at a long-term chart of this. 3 years. $129. Wow. Well, considering the fact that it spikes up every 180 days, I would project that the next spike is going to be sometime in, what is this even? November. So November of 2021, if Duo is gonna come strong, that's gonna be great. That's hilarious. I am, just out of curiosity, I'm just gonna set up one alert here at or above. There we go. It's gonna let me know when it's spiking up. All right, so LTRPB. Yes, very much so. Another couple of 100% up. Is the best time to buy. I'm just I gotta get used to these. I don't tend to invest into these kinds of companies long term. I want to find a perfect one. This one is lots of volatility all over the place. It seems like it spiked up and just reminds me of just a continuous sell off up until, you know, it establishes the floor. I don't know where the floor is going to be here. It seems like the floor is actually going to be even lower than the 180-day SMA line on this. BRPA. BRPA. What happened here? So $10 a share, and then $31 a share. That's not a good chart I'm pulling up. Okay, lots of volatility. Okay, this is a very interesting stock, I think. So trading above 180-day SMA line, just touching it on 180-day SMA line, still pointing down, still pointing to a sell-off. The strategy to use would literally just be either scalping or day trading. Nothing unusual, nothing like very beneficial for a long-term investing. But those spikes are very significant. Yeah, they're about 70 to 100%. On my radar, and usually try to buy in on the first halt up. Yeah, these almost always hit me 3 to 5 times. I think that's a decent strategy to use with these kinds of companies. Yeah, whenever you have your alerts set up, whenever you're monitoring these, it does seem like this is a very strong support level. So about $26 a share. Yeah, it's not a terrible time to buy and just hold on to it. If you look at this time chart, right? So 180 days, but when you look at a 3-year chart, when the company used to trade at about $9, $10 a share, way overbought. So very interesting. For day trading, scalping, I think the strategy of buying on the first like halt and just like as soon as it continues to go up and then, you know, making money on the intraday scalping makes sense. At this point, buying this long term makes absolutely no sense. To me, maybe not to you. I'm sure that it works out like fairly well for a lot of different people. I feel like I would not have enough nerve to see these kinds of fluctuations. But I do want to get better at this. I want to find a stock that I really, really like and start taking positions in those kinds of stocks, like slowly but surely. If I type in BRPA, actually, no. Which one do I like? I like the Duo, I think. I liked Duo, and yeah, because of these super weird spikes, like $47 out of 3 just goes to 37, and then from 7, oh, that's nothing. All right, let's see. What is it suggesting to? Okay, that one seems like it's getting ready to go up, but no, that's not interested in that. Max chart, it seems like it's getting Education Group Limited, awful. $7 a share. Seems like it's consolidating here. It seems like it's providing support on the major resistance. Okay, fine. Try to most day trade, but honestly, backholder in Duo, gonna stop holding from 6 and get out on interesting spike showed a few weeks ago. Yeah, there you go. Yeah, I mean, it's all the process of waiting. Like that's all about get a spread. I don't like the term. I want to come up with a different term. So $3.35, the lowest price. Yeah, the lowest price at which it was over the past 1 year. Not interested. No, not interested in this. I mean, I'm not trying to get. I want to find a good stock, but I don't want to convince myself to think that it's a good stock. Again, if you guys have any ideas, one by one. I know NASCAR All Out. I know you've been very active. I like that. I appreciate the communication. I appreciate the companies you have sent out. Let's see what else we can find. Those companies that we chatted about, they're like a backbone to like what we can find as well on the markets. Let's see if we can find another AMC or Gamestop or whatever is on the markets right now. Calvi, no, not interested. This looks like overall a good company to invest in. Okay, yeah, it's a misclicked. Go back. All right, we're trying to speculate here. We're trying to just milk the stock. Lowest 665, highest $14 in 2019. Lots of peaks, lots of valleys. Seems like it's on the oversold side right now, right? 785. Let's look at the full screen chart here in a second. It's getting some volume, which I appreciate. Come on. Just a little bit more. Like so. Let's see. So this is about $15 a share, so about 200%. Okay, so we can see that the lowest price at which you used to trade was about $5.90, currently trading at $7.85. Potential for profit about, well, actually about 100% easily to the previous highs, about 1460, yeah, 1470. Would I want to invest into something that is currently trading and it's continuing to make lower lows? It doesn't seem bad. It doesn't seem like a bad investment for a short period of time, for probably a couple of weeks. How long does it usually take for the company to spike up to its previous highs? So we have $15 on December 2019. Okay, that's not a good example. 2018, 2009. Let's see. It's 2019 all the way down to 2020, so about 3-4 months. So May. So about 2 months to spike up to the next high. 2018 December. All right, 2019 March. Okay, that's not bad. I just not very enthusiastic. It seems like it's on the oversold side. I like this. What is this? Some sort of pharmaceutical company. EIGR. EIGR. Yeah, selling off. It seems like it's approaching its major support. Let's look at a 1-year chart. Okay, good. I like this. I like the consolidation. I am definitely setting up my alerts. I think this is one of the most exciting stocks today. I think it's one of the most exciting stocks. And we're here a little bit earlier as well. So, earlier before the actual confirmation. So I don't think I want to take my position anytime soon, except maybe if it jumps above 20-day SMA line and confirms it as a support, or at least gets a little bit closer to it where it starts showing higher highs or higher lows. I would like that. For now, it still makes lower lows and lower highs. As long as it doesn't dip below $7.57, which is the previous low, I think it's a safe bet to say that with a decently robust volume, at least for this company, we can make some money. Let's see, at or below creates. Let's look at a 3-year chart. It does not look bad. Like long term, investing into this company, I don't think it's going to really make a lot of sense. I do think it's possible to make money on it because it's trading at almost 3-year lows and it has lots of volume, lots of volatility. This is an epitome of a company that a swing trader would use. If you look at the distance, it's probably going to be a couple of weeks. Yeah, 41 days. Then we have these peaks and valleys, right? So we have, this is probably going to be about two months. Yeah, so 77 days. We have 180 days, right? 147. Divide that by 2, about 76, 90 days for one major move to happen. The most recent move took place for 115 days. It's one of the longest drops for this specific company, unless we are like counting something that happened here and, you know, excluding all of the fluctuations like peaks and valleys, right, that happened here. So this was a 190-day drop. Usually if the drop happens for this company, it happens a little bit faster. Let's see, this drop took 80 days. I like this. I'm definitely adding this to my list. I think that's a good company to potentially invest into and trade. Let's say we'll add it to the chat as well. EIGR. EIGR. There we go. EIGR, correct? EIGR. Good. Potential buy after the confirmation. So confirmation means that we would want to see higher highs. We would want to be above 20-day SMA line at least. We would want to see a little bit more consolidation. We set up our alerts. We'll move on to the next one. But EIGR, you're staying with us. EIGR is a good one. all these biopharmaceutical companies are just super volatile. So much fluctuation. It's ridiculous. But that's what we like. That is what we like. Let's see. Not this one. Let's see what else we can take a peek at. Astra. Atara Biopharmaceuticals. What is this? Alright, so $13.18. It's pretty low. We had seen it spike up higher. It doesn't look like a nice dip to buy. Oh yeah, I know it does. I read your messages. It doesn't look like a nice dip to buy. But yeah, it does look like it's consolidating right now. So, I mean, as well as this company right here too. So, if you look at the full screen, so it used to consolidate at about $12 a share for a while, right? So we can see $12 a share here. We can see 2019 about the same $12 a share. 2020, $12 a share. We're approaching the same level, about $13 a share, and the highest it's been valued at here in 2018 was $50. This one is $59. A couple of 100% profits. Let's look at it. Yeah, it seems like a lot of consolidation is going on at this level. Okay, again, not trying to adjust to myself, to my desires of buying this. So this looks good. This looks good. Consolidation. This looks like a good confirmation of a support, of a very strong support, right? After it broke above this 20-day SMA line. So spike up until the 180-day SMA line was about 75% gain, and then sell-off. Sell-off is still happening, I'd say. I like the fact that RSI indicator is still on the oversold. MACD indicator is starting to point up, but I had seen plenty of sell-offs with this kind of consolidation, even though people are preparing to buy something like this, seeing that there's consolidation here. I'll be very, very careful of this. I definitely am going to set up my alerts with this, but I'm liking the trail that we've hit with these companies. So create an alert at or below, create, and the next one is also going to be above 15-day, 20-day SMA. Let's for early next week, but it was expecting it to consolidate on a Friday. Ended up being lead gainer in the market on Friday. Let's check it out. Let's check it out. Oh wow! All right, so that's a lot. 28 all the way from came from nothing. So yeah, it's been consolidating. It's been making higher highs for a while. What is this, since September 2020? Higher highs, spiked up, sold off, got to a very good place with, again, 20-day SMA line is almost touching this 180-day SMA line. Like, such a good confirmation, such a strong, powerful move of a candle, right? Lots of volume coming in. Yeah, that's good. I mean, yeah, it seems like a great play. It's very interesting to see where it's going to go within the next couple of days. But I mean, again, it's hard to judge a company that had already skyrocketed in price, right, by 200%, and then came down to $3 and then went up by 760%. Very cool. Very, very cool. Let's see what else we can find. Again, I'm liking what I'm seeing right now. No, not this one. This one is way overbought. And BMC, no. XLRN. Is that the one that we already clicked on? Maximum chart, way overbought. Don't want to I don't want to leave the ATRA. It's the one that we liked. Let's look at this one. $20 a share. It seems like it's consolidating. This looks like a decent long-term investment, but not too exciting. We need something a little bit more exciting. This one looks like it's consolidating. We looked into this one. It looks so familiar. Yeah. No. Way too oversold. Oversold. $20 a share. No. Just going through a ton of different stocks, ton of different companies, trying to see if there is going to be. Oh wow, that one dipped 24%. I'm curious. Harp. Oh wow. Yeah. So this one had dropped significantly. Again, the peaks and valleys. Lots of good opportunities in this company for a swing trader. Oh. All right, yeah, so usually it takes about 121 days. Oh wow, so yeah, that's 3 to 4 months moves. This is a very large sell-off. We had seen those before. Actually not at this level. Have we seen a big sell-off at this level? Kind of. We had a big sell-off here over the course of a couple of days, and the lowest price at which it was about $14 a share. So we still have a lot more room for sell-off. Also, yeah, long-term investing into this it's going to be very different from what it used to trade above 180 the SMA line. Now that it's trading below 180, it might act as a very strong resistance, and there's only air. There's not a very good strong support up until here, about $12.31 a share. So Symphony Momentum plays in IPOs. Yeah, Fred likes it because again, explosive strategy to incorporate. We gotta go. That's something. Yeah, keeps the ME on a watch on IPO for next week. I like that. Will do. Hey, thanks for participating in the chat. I hope to chat with you in some other streams, and you take care of yourself, man. You have a great day, or woman. I'm sorry, I don't know who you are, but take care, man. Bye. So Harp, and yeah, we'll definitely keep the ZME on our lookout. ZME. Let's see. Oh yeah, we forgot that it's an IPO. We forgot already. But it's on our chart. IPO. There we go. Let's see what else we can find. That doesn't look half bad. KLDO. Wait, that sounds familiar. KLDO. KLDO. All right, so the lowest price is about $5.77. We saw, okay, it's continuing a large sell-off, and it doesn't seem like it's really consolidation. I think consolidation should be at about $5.98. That's a matter of 60 cents difference, potential for loss, potential for profit till the next major resistance is going to be about $8.73, so about 32%. That's not bad, but I would want to see more consolidation. I would want to see more consolidation in order to invest into this, especially for a long-term investment. Also, I would like to see more repetition. I'm very scrupulous when it comes to this. I would want to see more of these spikes. I don't want to see just one and then a huge sell-off that might continue up into like $4 a share, previous low. All right. So let's look at this one. So LOGC trading at 468 right now. It seems like it's one of the lowest prices at which it has been over the past 2 years, right? Yeah, ever since 2018. would we want to invest into something, and that is just you gotta figure out whether it's a good time to buy, right? So the company used to trade at $17.98 a share, about $18 a share. It had continuously to go down, had continuously went down all the way up until $4.50 in 2020 for 2 years. Peaks and valleys, raised up, went down. Would it be a good time to invest into this kinds of company, into this kind of company while it's at such a low valuation? For a swing trade, I'd probably have to say yes. If it's trading at $4.68, next major resistance is going to be at $8.97, which is arguably about 90% higher than the current price. Logic Biotherapeutics, that's not bad. LOGC. And it's finally trading above 15-day SMA line. A red candle identifies that it has started to confirm it as a support, doesn't necessarily have to confirm it as a support. In previous case, it had confirmed it as a support, and then it tanked down right before it spiked all the way to the top. I do like the fact that it has its peaks and valleys with, a very clear path that it's trying to take. And even if it's like trying to fake you out, I know I'm talking about stocks like they're living things, but at the same time, it's all about a rational decision of being able to hold on to something for just long enough for the company to survive, like for the company's stock to go up. So very interesting. So $4.32. LOGC. 33% higher. Potential 33% higher. Huh. Good. I'm definitely gonna add this one. LOGC. LOGC potential buy. There we go. All right, so let's do a few more and let's wrap this up. Unless you guys have any other ideas for any other companies that you want me to break down, and we can chat about those. In a matter of fact, I think we got a decent enough company list for us to really just invest into and decide whether we want to do like a spread or like we can do some other spreads and figure it out. But looks pretty good to me. I don't see any other companies, and I just don't want to be not rational about those. So we will we'll definitely return and talk about some other similar companies and see which ones we can identify. But as of now, we've identified 7 different companies. We've broken down probably a couple, maybe 100 companies, up to 100 companies probably. So that was good. I call it a successful stream. So again, thanks everyone for tuning in, and we'll talk to you guys later.